Hey traders, I'm James, one of the content team leaders here at A1 Trading, and as we start today's stream, I wanted to let you know about one of our show's main sponsors, FX2 Funding. With all the craziness going on in the prop firm space, we're excited to share some of the solutions FX2 Funding has put together for their traders. First, FX2 is rolling out DX Trade, which is a web-based trading platform that provides traders a smooth trading experience. It also looks super cool too, but that's not all. By signing up with FX2, you get access to C-Trade. C-Trade is a trading terminal where you can create custom indicators or download ones from the community. Get access to all of this and more by signing up for FX2. So, for traders looking to get funded, you can get 15% off by using promo code A1Trading15. That's A1Trading15. The link and promo code can also be found in the description. Now, onto the show.
All right, guys. Welcome back. Thank you for being here. We're here for a really big day, and I got a new mic. I promised I would do it, and the new mic came in today. Watched the Amazon person deliver the mic with like seconds to spare before the stream started, but we got it plugged in. Here's a little look at it. For my technically savvy people, it's a Shure mic. It was recommended in some YouTube videos. I went ahead and just bought it. I think it was like $300 total with everything, and we've got it set up. Can you guys? Does it sound different? Does the mic sound okay? Mic check 1 2. Spitting some mad skills. That's exactly what I was thinking too. Let me know, guys. Does the mic sound okay? Does it sound good? Hopefully, it sounds a little better. I mean, the mic wasn't bad, but I sounds professional. Okay, man, that's exciting. Your voice sounds good on the new mic. Thank you. That is so exciting. And you know there's a sales pitch coming with it today, guys. You know, my regular friends, you know that a sales pitch has to come with that. We'll get to that in just a minute. First of all, why do we start a stream later than usual today? It's because we've got some later than usual market moving stuff happening. I'm going to pull up Forex Factory really quick, just so we're on the same page. Here is what's moving the markets here today. So we have several central bankers speaking today, like back to back at an event. We have Governor Bailey. We have another FOMC member, Barkin. We have Governor Macklem, and we have, of course, Jerome Powell speaking. All of this is happening in the next couple hours. We're going to be doing a live stream that goes continuously throughout this entire event. We've got coverage, and we've got people lined up for you guys today to keep you as best informed as possible. And oh man, I'm excited. I can't hear what my voice sounds like yet, but I'm sure I'll watch this back and be able to hear it. I'm also kind of excited, Chandler and James. What's cool is that like if there's conversation happening outside of my door in the main office area, hopefully you can't hear it, because like right now I could hear people chatting, but I am thinking that the mic is not going to pick it up, which is exciting. So very cool. Anyways, yes, today is a big day in terms of market news. We have seen, someone asked me as we were kicking off the stream, I saw the question of, Nick, you're starting to see that pullback in the indices. Are you starting to buy? And while that is a valid question, somebody pointed out specifically, let me see. I want to see if I can find the comment. There it is. 5% drawdown came through on the Dow Jones. Would this be a good time to start building positions? So that's a great question. I'll give you a two-part answer here. In terms of momentum trades, like how I what I talk about frequently on this channel, like looking for pullbacks, buying uptrends, things like that. I'm waiting for the Edge Finders confirmation, as you pointed out. Until we get a green light on stocks, I am going to stay sidelined. We do have potentially some interest on the NASDAQ. I'll keep an eye on that one. Maybe we'll find a trade here today. But currently, I am still long silver. I need to check on that because I'm also long oil. So we're going to be taking a look at commodities today. And with this new microphone, man, I really got to hear it. I got to hear what it sounds like. Hold on. A slurp test. Yeah, let's do a slurp test. Can you guys hear this swallow? You probably can. I mean, that was loud. That was a loud one. Let me do like a quiet one. Okay, you probably can you hear the second one? Hold on really quick, guys. I just have to listen to this myself because I'm so curious how this mic sounds. I just invested in something. So let me listen to it really quick. Okay. So let me listen. Whoa. Whoa. Okay, guys. That's exciting. Ring the cash register. It's worth the money. Charge me again. In fact, I said to James, I said, I bought one of these. I'm already seeing how cool it is. Let's go ahead and buy another one for the other room. So we're investing here on this channel. We are investing in the stream to make it better each and every day. Yeah, it sounds great. That's so exciting. What kind of mic is it? I want to buy the same one. So this is a Shure mic. I supported some guy on YouTube. I used his affiliate links. You guys should use our referral links, by the way. It helps out YouTubers. But he did this awesome video about like which mic is great for which kind of thing. And he mentioned podcasting. This is the one to go for. So I went ahead and bought using his affiliate link. I don't know if you guys do that. I try and do that for my fellow YouTubers out there. I will go we can hear Nick's internal organs. This is great. I usually go and I use their affiliate links, like if they have an Amazon link or something, just to help them out. But the guy's video was great, so I went ahead and did that. Anyways, gold's going to the moon, says Joey. Let's take a look at it, man. I gotta see, because hopefully it is, because then my silver trade might be doing a little better. I actually added slightly to my size. For those of you guys who are keeping up with me, slight updates. Number one, I made this green a little darker so that we can see my orders here on TradingView, a little easier to see. But I did add to my silver just slightly. I added right around the same entry point. Also, I'm not logged into my broker. I'll do that in a second. But currently, we continue to see just, basically silver is bouncing back slightly on the day. Gold is up on the day. This is solid for metals. Oil, I'm still long, stops below. I'll show you. Here's the difference. There's the new. Oh gosh, why did that do that? I don't want it to be so big. Okay, in the second, we'll just do this. This is all I did, so I'm just going to change it. Okay, yeah, so I'm long oil, I'm long silver. I'm watching other indices. The Nasdaq's come down pretty hard here, but I am a little hesitant to go chasing longs right now. Again, I think that you might have a little bit more room to pull back for some time. That being said, big drop yesterday, big drop the day before. So I am kind of sidelined on this one from a technical perspective. From a fundamental perspective, Edgefinder is still, I still like the story for stocks. I am bullish stocks. There's no question there. I just think technically I'd like to see a little bit of a setup for them. So NASDAQ of the three is the one that I like right now. We're getting a +5 score on the Edgefinder. Trend is kind of going bearish right now, so that's going to keep me just slightly sidelined. So yeah, ECB says cut rates soon, barring any major surprises. Notes that the bank is extremely attentive to OI. I assume you mean AI. Yeah. What kind of software was that? The one you used to check silver? This software that I'm using is called the Edgefinder. This is A1 Trading's primary software tool. We use this software to scan tons of different market data, and it generally gives us bullish or bearish readings on different assets, currency pairs, commodities, etc. We continue to see the US dollar strength looking really attractive. I did a video on that this morning. That will be out sometime this afternoon. So let's take a look at the dollar really quick. Where's the dollar at today? Dollar just looks really strong overall. The story here for the dollar index just looks really clear right now. What I mean by that is I'll just show you guys here on the setups page. Let's go to our categories and let's go major currency pairs. And so major currency pairs across the board are favoring the USD. What that's telling you is that when we look at economic data that's been coming out for these different places, generally things are favoring the US dollar. So if we take a look at GDP numbers, you can see we're getting a lot of red here. What that's telling you is that relative to the dollar, these currencies, the Kiwi, the pound, the euro, the Aussie, are looking less attractive relative to that US dollar. That's why these currency pairs are getting bearish readings relative to the US dollar, right? We can go down the line. Manufacturing PMI numbers, retail sales numbers coming out strong for the US yesterday. That was a big hit for the market. inflation, right? Inflation still very stubborn in the US, pointing towards rates might not come down as quickly as people thought. So the story for dollar bullishness, in my opinion, is very strong and justifies this movement. A lot of traders would say this market is overdone. It's got to come down. We've got to sell this thing. I would say that while I think that maybe there's room for a pullback, I would not be betting on one. For me, a pullback is an opportunity to join this move and look for a leg higher. That being said, it could just leg higher without a pullback, right? So the point is, when I look at fundamentals, I get a directional bias of to the upside, according to the Edge Finder's algorithm, which is what I stand by with in terms of like how I trade, right? The Edge Finder, the way it scores everything is really something that we've designed with the intention of our understanding of fundamentals, right? So when I look at the dollar index, the story is up. I'm looking for opportunities. So if you're watching dollar crosses, I don't care if you're watching euro dollar, pound dollar, Kiwi dollar. Right now, we have a unique scenario where the Edge Finder is uniformly bullish against everything. Uniformly bullish on the dollar against everything else. It's rare that you get that. Usually you do not get that. So for me, when I'm talking currencies, I'm looking at things like the euro dollar for possible pullback sells, right? So if we get a pullback there, if we get the pound dollar pullback sells, really like that story. So why on God's green earth, if the dollar's so strong, is gold going up? Okay. And speaking of green earth, you could not find a more green chart right now. Maybe the VIX. The VIX might be the only one. It's got a little red in it today. My point is that the gold market is so strong right now. And I've been making this point on my videos that so many people are like trying to short gold. They're trying to bet against gold. But why, if the dollar is strong, is gold going up? Here's the basic idea, guys. The dollar going up is not the value, the purchasing power of the currency going up. Ask anybody, any of my US friends, and anyone for that matter, does anybody feel like their currency is getting stronger at the grocery store? There's a trick question because the answer is no for everybody, right? Everybody has gone to the grocery store and been like, okay, let me get my bread and my eggs and my bananas and my whatever, and been like, why the heck is it quadrupled the price? Currency, the value of currency everywhere is declining rapidly. We're seeing global inflation still going on. That being said, the US is experiencing relatively, it's enjoying its status as the global reserve currency. It is slightly outperforming the others. Okay, what we're seeing, we heard earlier from the ECB. We've heard these chants for rate cuts are coming for the ECB. It's because the recession looks more likely there than it does in the US right now. So the dollar looks relatively strong. It doesn't mean that the dollar's purchasing power is rapidly going up. And if that was the case, gold would likely be going down. Gold is up for a few reasons. It's up because central banks are expected to cut around the world because the economies might start to slow down. People are a little concerned about that. They're concerned about perhaps monetary easing that could come back into the picture, printing of currency essentially. And they're also concerned of what's going on with the Middle East, right? Who isn't? That's a scary story, right? Escalation in conflict globally is a scary thing. We see oil, for example, does not want to quit. It just does not want to roll over, it seems like. It keeps coming down to this area. If you're watching oil with me, 84.50 just seems to have so much strength for WTI. So I'm looking at oil, and I have longs here, and I stay long oil unless we break 84.50. Conditions just favor bullishness right now for me and my system. Okay, so if I add into, let's go like this really quick, guys. We'll add in commodities for a second. So here's oil. Oil's getting a +7. Why is oil getting a bullish read? Well, lately, it's been moving kind of with the dollar. If there's strong economic demand for oil out of the US, the oil market likely will move up. So we can see that in the economic data section, right? Oh, I said data. I don't say data. I say data. What do you guys say? Data or data? Like, I say data. I don't know if there's a right way or not, but Depends where you are in the world, maybe. I say data. I know a lot of people probably like, it's data. It's data. Anyways, oil's getting a bullish reading overall. And what we can see here is the reasoning for that is that demand side still looks pretty good. And this is not even considering geopolitics, right? Garrett says data, dad, That's how Garrett says it, dad, I like it. Da. This is how I'm going to start saying it. So once we take a look at the da here, we can see that, again, economic demand. So think about it, right? If you're thinking about the demand side for oil, if the economies around the world look strong, the demand for oil will also look strong, right? That's the demand side. The supply side of oil is another part of the equation, because if you get supply issues, like geopolitics right now, right? If things escalate or continue to remain uncertain, if there is any escalation, if Israel comes back to here's another pronunciation I have to say right, Iran. I said Iran. People said it's Iran. So Iran. Hopefully I said it right. If tensions continue to be a thing there, which is incredibly sad, and I hope that they are not. Like, regardless of my oil trade, I would like to see, peace in the world, just like anybody else. But if things continue to stay escalated, I think oil trades at a premium for that reason. There's people who, or the market participants are saying, well, oil in some ways is kind of a hedge to that situation. You stay long oil. Not to mention you've got stock markets kind of really struggling here recently. I say really struggling. Let me just say, if you're new to indices, hello, welcome. This is normal. Stocks don't go up forever. And so we're seeing a pullback finally. I mean, I've been holding my breath. I don't know if I told you guys that. Well, I talked endlessly about how I caught the early, rip here, and I end up closing right at the end of 2023 just to watch the stock market leave me behind. So I am welcoming a pullback. I am long or bullish stocks. I've sold puts on several different things here. And if we do get, some bounce back here, I mentioned earlier, I like the NASDAQ. I like the Mag 7. Assuming it's the big players in the market. And I generally like those big players. They make a lot of money. They have a lot of growth. And if we enter into a period where inflation stays higher for longer, I'd rather be parked in the companies that I know are going to still have growth, not betting on the companies that need cuts in order to grow, right? Does that make sense? I could be wrong about that, because there's challenge to that. If I had a very, competent opponent on the stream, somebody might push back on me and say, Nick, you can't say that you want to be long tech in higher interest rates because tech is sensitive to it. Cyclicals. Yes, that is true. But I still think they do cut rates eventually. I could be wrong about that. And in that case, I'll pay the price for owning tech. But I'd rather be in tech because I still think they will cut rates. It's just a matter of when, not if. Now, I could be wrong in that case. And if I'm wrong and they start hiking rates, I will be on the worst side of the spectrum. If you are long the NASDAQ and then they start hiking rates, my opinion, you probably experience another 20, 30% drawdown like we saw in 2022. Does that make sense? Type yes in the chat if that makes sense. My thesis on the NASDAQ, why I like the NASDAQ bullish, if we can get a setup here, and I don't see a setup yet. Technically, I don't like it. I'd like to see like a bounce or something. Like if we end candle, nicely today, maybe. I'd rather be in the NASDAQ because I still think they're going to cut rates at some point. It's just when. And that when spooks certain areas of the market. It spooks unevenly areas of the market. Like the Russell. Russell does not take it well. Right? The Russell's freaking out because higher interest rates for longer means that a lot of those companies which are less profitable are going to be in pain. The Dow, kind of the same thing. Why? Because why would I buy dividend stocks when I could just get risk-free treasury bonds? And I'm saying all of this. Meanwhile, I've sold puts on TLT, so I'm underwater on this position. In fact, let me show you the P&L on this. It's not fun. I've entered into a drawdown on several positions here recently. Here's all of my current trades. So I sold puts on TLT. You can see I'm down $3,500 on that trade. Not fun. This is part of my, not my momentum trading strategy, but my wheel trading strategy or my mean reversion trading strategy. I thought at the time when I sold these puts, it looked like economic data or data out of the US was going to start to cool. And if the economic data actually started to come out cool, this trade would have looked like a hero. I actually sold puts before this, collected the full premium, never got assigned. That was great. Made like, I think I want to say like $600 or $500. Then I sold puts again, and this bond market has dropped hard. Why? And what does this have to do with my currency pairs that I trade? It has everything. Just remember, when we talk about what you'll notice about my streams is, and about my audience or my guests that come on this show, is that we rotate lots of different markets. The core reason is that if you're a fundamentalist or you're trying to pick up this stuff, if you are trying to get into macro fundamentals and how it moves the markets, you arguably should be agnostic to which market you're looking at. Now, there's some restraints on there. I don't really trade individual stocks very much. I don't really trade, I don't trade everything. But generally, the fundamental story is the fundamental story, regardless of what you're watching. So something to think about is I trade bonds, I trade currencies, I trade commodities and indices. It just kind of depends what is matching up with my system. So something to think about. Also, I should mention really quick, guys, I promised that I would do a ethical sales pitch to you guys today. You guys ready for my sales pitch? I'm gonna need your help to let me know how, on a scale of 1 to 10, my sales pitch does here. Okay. I'm trying to stay as transparent as I can. These live streams and everything that we do here, I do genuinely trade the markets. I show you guys my live P&L, my live accounts all the time. I try and keep it as real as I possibly can with you. I also run a software company. That is how we build this stuff here that we see here. So this has been basically funded by the community. People have purchased the copies of the Edge Finder in the past, which has helped us to continue the development costs of building it into a better and better product year after year. We're celebrating 2 years since we launched this product. To celebrate, we are doing a massive discount sale right now. If you've been watching my streams for a while and you don't even need to hear the rest of my pitch, check this out. 45% off is currently available. This is the biggest discount that we do all year long. No cap, no joke, whatever you want to say. 45% off. You can get a massive discount. It is a one-time purchase. Your purchase goes towards helping us to continue to develop this product. We have invested hundreds of thousands of dollars into building it into what it is right now, and it gets better every single month. That being said, if you want a copy, if you're looking to get into fundamentals, if you want to go through this stuff all in one place, PMI data, retail sales data, if you want to look at NFP, if you want to look at our top setups algorithm and the output for currency pairs, metals, commodities, indices, crypto, we're adding it all into the Edge Finder. We're trying to build the best product on the block. If you want a copy, click this link, send us a direct message, and someone from my staff here in the office will help you with that discount and give you any information that you need. So if you have questions, if you want to hear about what the tool does, or you need more clarification, please take a second to send us a direct message here. Okay, now here's another side of the pitch that I want to share with you. A couple days ago, I think it was like 2 days ago, I mentioned that I'm an aspiring content creator. I am a trader first, a business owner, but I'm trying to improve my content. I'm trying to get better and better for you guys. I love making content. I love trading. I love talking about it and sharing it with other people. Okay. This microphone, I mentioned that I had this mic, which was an okay mic, but I realized, I don't need a better mic. I don't need to spend any money on a mic. That was my thought process. But then I was like, you know what? If I really want to be the best content creator that I can be, the investment of couple $100, $300, and then I'm going to buy another one. So $600 to improve our content may sound like a lot, but I'm trying to be a good content creator. It's an investment that will return itself 50,000 times over the time that I do this. Let me turn that around on you guys if you're an aspiring trader. I'm also a trader. I'm a content creator. I create content. I also trade, and you guys see it every day. The other side of this is the Edge Finder is an investment. It's a tool that you have to pay for. It's not free because it's not free for us to build. It's not free for anyone. The Edge Finder is a remarkable tool for allowing traders to look at more data more quickly. If you see yourself trading for 3, 2, 5, 10 years from now, the product's a one-time fee. If you're serious about this stuff, sure, you might be able to sneak a peek here and there on videos. But if you're just going to be trading for the next 5, 10 years, it's worth the one-time payment, especially when it's on discount sale like that. And make an investment, just like I did into my mic, right? Make an investment into the tool. If you have not already, and you've been convinced, I'm telling you, it's a wonderful product. I'm not making that up. We have so many people who are using it. There's my sales pitch. Click the link, send us a direct message, and there you go. Let me know, how was it? I know it was a long one. I apologize. I might have bored some people who already have it. They're like, it's great. I've already got it. Or maybe you just hate me and you're like, no, it's a terrible product. Stop talking about it. Then I don't know why you're watching the show. But with that said, let's get back to markets. S&P 500 is sitting at a support level. I'm very curious to see how it reacts today. With the upcoming speeches, Nick with the website says 40. Yes, you're right. But for stream viewers right now, if you click the link and chat with us, you can get 45%. For the Culture FX, what's up, man? Good to see you. Link is not clickable. You can also go to a1trading.com and just click chat with us, and someone from my staff will connect with you there. So again, current positions, I've entered into a drawdown. My win streak may have come to a close, sadly. I've still got oil. I've still got silver. Silver's like flat for me. Let me pull up silver while we're at it. So SLV, I'm not logged in on my broker here. That's okay. You can see, I pulled it up. SLV, I've got silver positions on right now. I entered it yesterday. I added slightly here today. And theory for this is that, again, silver is an industrial metal. The retail sales numbers that we saw, everything overall seems to point towards the U.S. economy still chugging along. If that's the case, demand for silver, copper, platinum, oil, raw materials, right? Coffee, even, commodities, if you're a futures trader, look pretty attractive overall. So I have silver and oil longs currently. In terms of my friends who trade gold, why did I pick silver over gold? The main reason is because, again, silver is an industrial metal, whereas gold is more of a store of wealth metal, right? They're both precious metals, but gold is more of a, like, you buy it and you hold it as a way to safe hold your money. Whereas silver, it was not a very good safe haven compared to gold, right? Gold is just reign supreme, but it's more of a industrial commodity. A ton of silver that gets produced goes right into production of solar panels, airplanes, just everything. So I'm long silver, I'm long oil. Dollar index also continue to be strong due to its relative outperformance when looking at the economic data. So for me, pullbacks on the dollar look mostly attractive for more upside. We'll continue to watch that. NASDAQ, I've mentioned, is kind of on the watch list, but I'd like to see a technical setup that looks a little cleaner than this. Right now, we had an uptrend. It went sideways. Now it's kind of trying to break out lower. So I can't really justify buying it at this point, but I'll wait to see how price action forms. We've got some time here before we get into the big event with Jerome Powell speaking, and we have Governor Bailey, and we have Barkin speaking, and Macklem. All of these guys, I believe, are at a convention, fireside chat, I believe. Due to participate in a fireside chat about economic trends in North America at the Washington Forum. So these guys are going back to back, I believe. So yeah, we got Governor Macklem. So should be interesting to see what comes out of that. Anything that gets said that is showing like a trend towards dovishness could be interesting, or if the Fed looks a little bit more hawkish, could be really interesting. Nick, where did you learn about fundamentals? Just a ton of reading, watching, listening, studying stuff. There's no like short tutorial on how to do edge on fundamentals. The purpose of the Edge Finder, though, is to try and simplify all of that stuff. So if you're like wondering, how does this data form? We color coded fundamentals. That's kind of the approach. So like jobs data coming out strong, we interpret as strong for the stock market. Now you could make the point, well, strong jobs, that means they're not going to cut rates. That's bearish for the stock market. But we generally favor more the idea that a strong economy is not going to crash the stock market, most likely, right? It's kind of a weird scenario to think the stock market's going to crash because it's so strong, right? The economy is so strong, right? That's kind of a weird theory. So anyways, yeah. Edge Finder also summarizes COT like a goat. Like a goat. It is quite useful for if you're somebody who's interested in COT data. You can also look at retail positioning, which we should check on just to see. Got gold giving us a contrarian sell signal. That's interesting. I wouldn't have expected that. Dollar yen, the DAX. Retail traders very short on these. That being said, so gold is still very neutral overall. You can see getting a neutral reading here. So nothing for gold right now. Bearish side, we're seeing euro dollar, the FTSE, Australian dollar, the pound, Kiwi dollar. So yeah, some things to think about. Guys, we are going to change gears here for a second. I think we've got, James, are we good for stock session here? All right, James is going to be taking over in just a second, guys. We're going to be doing our stock picking session where you guys in the audience are going to be able to vote for which stocks we purchase for our long-term community portfolio, which is going to be really fun. Today's a good day to do it. I mean, stocks are, if you're going to long-term invest, I'd rather buy on the days that the market's down rather than buy on the day that the market's up. So with that said, we're going to take a real quick break, thank our sponsors, and then we will be back with James, who's going to take over for a little bit, and I'll come back before we get into the big news event. So take it away, James, just after this.
Attention, A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker, Eightcap, is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show. What's going on, everybody? Welcome back to our little stock segment that we're doing here. Let me catch you up on what we were doing yesterday. So if you haven't already, if you're unfamiliar, let me give you the super quick breakdown of what we're doing here. This is our, and I mean that, our WeBull account. Okay, you tell me what to buy and I'm buying it. So far, we have partial shares of Apple, Nvidia, Reddit, Nike, Walmart, Lockheed Martin, JP Morgan, Coke, OGN, Gold, Meta, and the Bitcoin ETF, a Bitcoin ETF. If you haven't already, 100% free to join. You can join our Telegram. This is where we do all of the voting. So you can see yesterday, Nick and I are having a lot of fun doing this. He threw out Meta versus Google would be a fun one to do. And then we just kept snowballing from there. So we added a lot of stuff yesterday. Meta versus Google was really, really close. If you were voting on this in the Telegram yesterday, you saw that it was like 49, 51, 48, 52, like really, really close. But Meta was in the lead for most of it. And so I went ahead and bought it. And then overnight, it flipped to Google. So we might have to come back and buy some Google. We bought some gold. And then we bought even more gold. And then we bought some of the Bitcoin ETF. So this is where we're at right now. These are all of our open positions. And to start off quickly, I've got one that I'm going to throw at you already. So again, join the Telegram. Completely free to join. Join the Telegram, and you can vote on what we're going to buy here. Right now, we're going to buy either Netflix. Let me pull up the charts. We are either going to buy, that's a little sneak peek at later, what we're looking at later. Netflix. Are we buying Netflix? It's a weekly chart. Here's a daily chart. Or, and I have a feeling I know where we're going with this, but are we buying Netflix or are we buying Tesla? Netflix or Tesla? I have a feeling I know what the answer is right away. We're just in it. We're voting. We're buying stocks. And in the past, what we've been doing is we've been buying $10 partial shares, right? We started with $500 in the account. We're down a little bit of money. We're down $5, but we started with 500 total dollars in our account. So far, with all of the shares that we bought, we spent just over $150 on these shares. So we still have a cash balance of $340, and we're going to make a dent. We're going to make a big dent in that today. All right, because I've got plans to buy $20 shares today. Netflix versus Tesla is the first one. Then I have another one that we'll get to in just a little bit. I've got a few more that we're going to get to in a little bit. And then I think that we're going to buy a second share of something that we already own. And then at the end of the live stream, we have a really busy live stream out of nowhere today. We got Kenzo coming on here in about 20 minutes. So if you guys are a fan of the stream, if you watch on Fridays, you're familiar with Kenzo. Kenzo will be here soon. Nick and Frank are going to come back on later. And we're going to see what Jerome Powell, Tiff Macklem, Andrew Bailey have to say during this press conference. So super busy stream today. But starting off, Netflix versus Tesla, $20 share. Where is my Telegram? Here it is. Let's see. So what are we buying? Netflix or Tesla? Netflix or Tesla? Let me look at the charts one more time. So this is Tesla. Tesla has been down like crazy. Analysts are saying hold. Like 20, 32% are saying buy, either strong buy or buy. Most of them are saying hold, but there's a fair amount that are saying sell also. So kind of mixed reviews here on Tesla. Looking at the financials, their most recent Q4 of 2023 was actually super impressive, up 114% from Q4 2022. You can see their net income 2022 Q4 $3.71 billion, up to $7.94 billion. But sprinkled in there, they've had down months as well. Total revenue overall is up, but at the end of 2023, not nearly as much as the previous quarters, right? You see 37%, 24%, 47%. That's really good, but down to 8.84%, all the way down to 3.5%. So slowing significantly. Operating income has been negative all last year. So Tesla, interesting. I also saw in the news, I don't see it here, but I saw a different news source saying that Tesla was planning on laying off like 10% of their workforce or something like that. I'm not sure what a move like that would do to the stock price, but I did see that somewhere. And Netflix. Let's see what the analysts have to say about Netflix really quickly. Netflix is a buy, according to analysts. Netflix is a buy, even though it's right at its average price. So it's already kind of leaning towards the higher price target, right? We're definitely not leaning towards the lower price target. But analysts are saying buy. The financials show crazy growth 2023 quarter four, 400%. Total revenue continuing to grow almost every quarter. We got 2, 3, back to 2, 7, now 12.5, continuing to grow. Operating income also been positive the last 3 quarters. So Netflix looks promising. Even though it's way more expensive than Tesla, I think I'm convinced. Netflix, I have a feeling I know what the answer is going to be. Of course, everybody wants to buy Tesla. All right, so we got 69 votes in. I think I'm good to call it there. It was close, 46-54. Was pretty close, but the people are saying Tesla. So we're going to buy Tesla, $20 worth of Tesla. $20 market order, and we're buying it just like that. Boom. All right, there we go. We are now proud Tesla owners. BMAX says the people don't know. Miners Maniac says Tesla looks sexy. All right. If you say so. All right. Next up on the docket. All right. I'm excited for this one. I'm actually surprised that we don't own either of these companies yet. So it's about time that we purchased one of these two. All right. So again, join the Telegram if you want to vote and participate in this. Completely free to join. Stock number 1. We're going head to head again. Stock number 1, Google. What should have been picked up yesterday, right? Again, at the time, I waited like 20 minutes because it was so close and I really wanted to buy some Google stock, but Meta was just ahead the entire time. So I have to listen to the people. So I went ahead and bought the Meta stock, but then it reversed again overnight and people wanted Google. Where were you guys yesterday? We needed you. Google is number 1. Can you guess what number 2 is going to be? Similar to Google, kind of. Big tech stock. Microsoft. Are we buying Google or are we buying Microsoft? Let's start with the Microsoft first. Analysts say buy. Wow. Analysts say buy Microsoft. It's actually, no, it is slightly above its average price, heading towards the high price, but analysts are saying buy. Let's look at the financials. I was looking at this earlier. WeBull actually has such cool little widgets and gadgets that you can put on here. As someone who is really new to investing and stuff myself, this stuff is really, really useful because it makes it really easy to see the most recent stuff and the most important stuff. And even this too, just getting to see what other analysts think about the stock is really helpful. So let's look at the financials really quickly. Net income, nothing but growth the past 4 quarters. Beautiful. Love to see it. Total revenue, again, nothing but growth. 2%, 7%, 8%, 13%, 17.5% growth, total revenue. Operating income, basically the same thing. Microsoft has been on a tear financially. And the analysts like it. But the analysts also like Google. All right. The analysts also like Google, and the price of Google is less expensive than the one share of Google is less than a share of Microsoft, which means that our $20 goes longer. I think that's how that works. I think that's how math works. Financials, Google, past 3 quarters, net income, positive, continued growth. Love to see it. Total revenue, same thing. Looks very similar to Microsoft. Operating income, again, looks very similar to Microsoft. Quarter after quarter, we're seeing continued growth right now. The analysts agree. They like them both. And I think that at some point we will own both. But today we are only buying one of them. We're buying $20 of either Google or Microsoft. And honestly, I don't think that we can go wrong with either of these right now. I don't think that we can go wrong buying Google or Microsoft right now. I like them both. The poll is up. Google or Microsoft. We have 45 votes in right now. Get your votes in if you haven't joined yet. Let's see what the see. Does the chat have anything to say? Potential gains for upcoming quarters. Poll is up. Advantages. $45 votes in. Anybody else sneaking in a vote last second? Anybody? I think I like them both. I don't think that we can go wrong here just because the price is cheaper to buy Google. I think I'm leaning towards Google. That's going to be my vote. Late to the party here, but a question for the team. Nick specifically, did you notice that we've had almost a 5% pullback on the S&P? I'm going to watch this stream over right now to see for myself. Darnell, if you have gone back, then you won't hear what I'm saying, but Nick will be back to talk more about that. We also have Kenzo coming on to do more financial stuff, more indice and trading stuff. Right now, we're going to stick with the investing. My vote is for Google, and the people like Google. Okay. 60 votes in, 60-40 split. People like Google. I like Google as well. Let's go ahead and buy some Google. $20. Oh. $20. Well, oh, wait. Did that switch? That switched from hold on. Did I accidentally only buy $10 worth of Tesla? Okay, well, let me buy this really quick and then I'll double check. $20 market, Google, buy, hello. Welcome to the portfolio. Did I accidentally only buy $10? Oh, I did. I accidentally only bought $10 worth of Tesla because it switched when I did that. Okay, so let me buy another 10. Another $10, Tesla market, buy it. Okay. So just to be clear, I did not I said that I was going to buy $20 worth of both of these anyway. When I bought Tesla the first time, I accidentally only bought 10, so I just bought another 10. So $20. $20 in Google, $20 in Tesla. We also have $20 in gold because y'all doubled down on that yesterday in the Telegram. Again, completely free to join if you want to. Yesterday, we had gold versus silver, gold heavy favorite. Gold versus the Bitcoin ETF. Again, gold heavy favorite. So we had to show these two some love. Silver or Bitcoin ETF. Bitcoin barely edged out silver. Okay. So now we're going to get a little bit more in depth here. So the head-to-heads are fun. We got some big names. Now we're going to dive a little bit deeper into the wild world of stocks because we have some more fun companies to look at here, some more interesting stuff. The theme that we were going with for today, and we're going to have a second theme later. If you're enjoying this stock segment and you want to take part of it again later, after Jerome Powell and everybody is wrapped up, I think we're going to close the stream doing another stock segment. I have a second part to the docket here ready to go. I told you we're going to put a dent in that cash balance today. We're buying a lot of stocks today. It's so much fun adding to the portfolio, seeing it grow, seeing the number of stocks in the portfolio grow as my account value dips continuously day after day. But that's okay because stocks are in a bit of pullback right now, which means that we're getting them at a cheaper price, hopefully, and they will go up. All right, McDonald's. Oh, yeah. So first off, this category is food. So we're going to look at 4 different food stocks, and I'm going to. Okay, I'll just say them so that Chandler can put them in the thing. Wait to vote though. Wait till we get all the information to vote. Chandler, I'm going to send you a message of all the stuff we're looking at. And oops, you know what I mean. Okay. So first up, we have McDonald's. This is number one. Analysts like McDonald's. Analysts say buy. The financials are good. Each quarter has seen growth. However, it's not that exponential growth where quarter after quarter after quarter the growth is bigger, right? We can see like quarter two of 2023 was exponentially larger than quarter two of 2022, but then we dipped down a little bit and we dipped down even more. However, it's all still been positive overall. Total revenue recently, we've ordered, oh, look at that. We've ordered a second professional podcasting mic for James and Frank. So, okay, yeah, that's interesting. So you guys who have been watching for the past however long, let us know in the chat. Is there a difference between Nick's mic and this mic? Because it seemed like earlier y'all were saying that it sounded really good. So that's cool to see. It's fun upgrading this stuff. We just got this new light up here too, which I accidentally just turned off because it's motion activated, right? That's pretty cool. It's fun upgrading all the streaming stuff. We want to put on the best show we can for you guys. Operating income positive as well. Quarter two of 2023. People were eating their McDonald's. Quarter two of 2023. That was a big quarter for them. All right. So McDonald's is number one.
I helped out with that stock price, James.
Oh, you did?
I ate a lot of McDonald's. Anyways, I just wanted to, you mentioned comparing the mics. For those of you guys in the audience, can you tell the difference? I just ordered a second mic for the other room, and that way we'll just have impeccable audio quality for everybody. That's exciting.
Audio, visual, stock analysis.
Yeah,
everything is top of the line here.
We're leveling the whole thing up. Okay, anyways, I'll let you get back to it. I just wanted to compare mic sounds. Does it sound better, guys? Let us know in the chat.
Okay, so I'm going to go through this a little bit quickly because, like I said, Kenzo is joining, and I don't want to keep Kenzo waiting in case he does join a little bit early. So McDonald's is number one. Overall, seems pretty positive. Number two is oh my God, Domino's. Analysts also say buy. Financials, again, positive overall, not quite as positive as McDonald's. The other thing I thought was really fun as I was kind of playing around and looking at this earlier was the peer comparison. The peer comparison is really interesting because it shows you, so these are restaurants and bars, and it shows you the ranking on the EPS, estimated profits per share, I think is what that was. Chipotle being number one. Big Laurie, I'm not sure what that is two. Domino's 3, McDonald's 4. That's where I was looking to find some of these earlier today. So Domino's looks like a buy. Financials, I like the bar chart view. Financials look pretty good, not as impressive as McDonald's. Stock price also higher than McDonald's. Earnings per share, thank you very much. Earnings per share. Sooner or later, we shall hear Nick's heartbeat when he trades gold. That was funny. Okay, number 3 on our list. So number 1, McDonald's. Number 2, Domino's. Don't forget those. Number 3, little bit different, Starbucks. Starbucks stock has been trending down since 2023. It's been trending down since 2023, so well off of all-time highs. Analysts are also saying buy. We are below average price. Not only are we below average price, we're below the low analyst target price. Okay? That's worth noting. Financials, positive, 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 really positive, honestly. I like Starbucks. I like Starbucks a lot, I will say. Last one, finish up with McDonald's, Domino's, Starbucks. This one a little bit different, but I saw it on here and I thought this was funny. Let me ask you this really quickly in the chat. What do you think the stock ticker PLAY stands for? Play. Nick, do you know what play is? PLAY? He might have
Dave and Buster's.
Oh, he did. He said, I don't know if you heard it. I was kind of talking over him when he said it, but he got it right. It is in fact Dave and Buster's is play. Now, analysts 33% think it's a strong buy, 33% think it's a buy, 33% say hold. Again, coming in below the low target price here. I don't know what happened to Dave and Buster's this past week, but their stock has absolutely tanked. Now, my theory is we were trading at all-time highs for Dave & Buster's, or close to all-time highs, recent highs at least, right? $69 per share, recent highs for Dave & Buster's, all the way back to 2017. All the way back to 2017. This thing grew like crazy at the end of 2023, just had an absolute skyrocket surge. And now I think that it's just pulling back due to the sheer amount of growth that it had, because this thing was not moving really for a long time. 2021 up to the middle of 2023. So for 2.5 years, this thing was just stuck in a range right here. And then finally broke out in a big way. And now I think it's just giving back some of those gains, but primed for another run. Financials, not as impressive as the other 3 companies that we were taking a look at, but analysts still say buy. It's the cheapest and it's below their low target price. So there we go. Those are our 4 options. If I can get my mouse back on the screen, there we go. McDonald's, Starbucks, Dave & Buster's, Domino's is not on here, but that's okay. We can skip Domino's for now. I like Starbucks, honestly. But the people want McDonald's. 85 votes in. McDonald's clear and heavy favorite. All right. McDonald's did have really impressive financials, and the analysts do agree that it's a buy. Technically speaking, their target or their price right now is below their low analyst target price. So technically speaking, it is a good time to get in according to analysts. So I'm not going to argue with you guys. I like Starbucks though. $20 of McDonald's. Add it. Oh no, don't let me. Oh, wait. There we go. Okay. $20 of McDonald's. Boom. Bought it. We're in it. Just like that. All right. Really quickly, there was one last thing I wanted to do. Kenzo is about to join us. He's in the back room now, so he is about to join us. The last thing I wanted to do to close out this segment was buy another share of something that we already own. And as we speak, there are only 4 stocks that we own that are in the positive for us at the moment. It's Meta, Gold, Lockheed Martin, and Walmart. So I would like a poll, and I already feel like I know where this is going to go, but it's okay. Let's set up a poll for Walmart, Lockheed Martin, Gold, and Meta. Walmart, Lockheed Martin, Gold, and Meta. Let's buy another share, another $10, not 20 this time, just $10 of one of those 4. So again, the grand finale poll. Can we not do 4 in the poll anymore? Walmart, Lockheed Martin, Gold, Meta. All right. Walmart, Lockheed Martin, Gold, or Meta. What are we buying? Join the Telegram, completely free to join. If you're enjoying this segment, we are going to do it again at the end. GLD gang undefeated. Well, I know what Nick's voting for. What do I want to vote for? Gold, Meta, Lockheed, Walmart. Lockheed is up the most overall, but also has a really expensive stock price. Same with Meta, $500 a share, $456 a share. Walmart, on the other hand, is only trading at $60 a share, and it's up 1.5%, 1.4% since we bought it. Walmart. Analysts are saying buy. Below average price. It's near the low price too. That's going to be my vote. All right, here we are, wrapping it up. 26 votes in. My vote is for Walmart. And of course, I knew that was going to happen. Okay. Gold. We're buying another $10 worth of gold. All right. Market, $10. Buy. We now own more gold than anyone else in the world. No, I'm just kidding. We own more gold. We own $30 worth of gold. That is the most out of anything else. We own $20 of Apple, $20 of NVIDIA, $17. That was one full share of OGN. That's a healthcare company. $20 worth of Tesla, Google, and McDonald's, but $30 worth of gold. All right, so that's going to wrap up this segment. Thank you for helping me add to the portfolio. Just to recap really quickly, we added Tesla stock today. We added Google stock today. We added McDonald's stock today. And we bought a little bit more gold. So that was a lot. And we have more to do later. A little bit more to do later. Not quite that much, but a little bit more that we can do later. With that out of the way, let's go ahead and bring in Kenzo. I think we'll run a quick little break, and then we're going to bring in Kenzo. And then shortly after that, it's time for old Jerome Powell. So we will be right back right after this. Thanks for hanging out and talking stocks with me. And remember, if you're looking to start your own stock portfolio for long-term investing, you can get free stock shares just for signing up with our partner broker, WeBull. We'll drop the link in the chat now, or you can find it in the description down below. If you're not in the US or UK, don't worry. You can still buy and sell stock CFDs with Eightcap, which is also linked below. We'll see you next time.
Hey, Kenzo, how's it going, man? Welcome back to the show. And hope you. I know we spoke about this last time, being able to see some of our portfolio stock selections that we're doing. James did an awesome job taking over the show for a little bit. And Kenzo, now you're up. We're going to be talking a little markets here ahead of Jerome Powell and other speakers that are coming on today. How you doing, man?
I'm doing great, thanks, and you, man, and your viewers.
I'm doing great. It's good to have you back on the show. Just a little intro. So, Kenzo, I'm gonna let you take over for a little bit here, but before I do, I just wanted to give the audience a little context. So Kenzo is a fundamental and technical trader all the way from South Africa. So we're on other sides of the globe right now, but we're both talking markets. We're going to be taking a look at, with Kenzo, the dollar index. We'll be looking at gold, currency pairs, indices, all sorts of good stuff. And I want to just invite everybody who's hanging out with me, stick around. Kenzo is a great, he does a great job at combining technicals and fundamentals. And if you guys drop some charts that you'd like Kenzo to go through, he's very qualified to do that. So real quick, we're going to drop the link to Kenzo's YouTube channel. If you enjoy this session, make sure to go support his channel. And Kenzo, if you're good to go, we'll just give you the floor for a little bit. Is that good?
Yes, that's great. That's really great.
Okay, sounds good. Well, I'll be back with you in just a little bit.
Okay, no problem.
Right.
So, good evening, everyone. I hope you are doing great. This is Kenzo, as he said. So, we are going to go actually on the markets, but first thing first, I will be talking about DXY because that is the dollar indicator. So it shows the strength of the dollar, and if it pushes up or if it goes up, that shows us that the dollar is quite strong, but not against everything. We saw on gold that yes, it doesn't really mean that when a DXY is stronger, it means that gold it's supposed to sell, right? So we have some conflicts or geopolitical news all over the place. So I think that it's quite obvious, and automatically that makes these safe assets or safe haven assets like gold or other commodities to actually go higher. So now we are on DXY. What's really happening? We can see that yes, around this level, we can see that the market is actually uptrending. This is a daily time frame. So that shows that the market is quite stronger on the dollar side. But I feel like we reached an area that we can call a resistance. So the question is, will this market respect this area and go down? This is a daily time frame, by the way. So there is that possibility. But yeah, hey, we have some serious economic news which are actually in the positive side. Like we had retail sales, which yesterday was 1.1% core retail sales, and that actually means that the prices are actually retail sales are going higher, and that causes the inflation to even go even higher. And at the end of the day, it's going to be difficult for Fed to cut the rates. So we just want to hear from Powell later. I think it's in an hour. Maybe we'll say something. So whatever that is going to say, I think is going to decide this area. You see, we have a resistance here. So if maybe whatever that is going to say is going to be on the cutting side of the rates, I think we're going to see the market reversing from this area. And what we can do is we can actually look for buys on the other pairs which are going against the dollar, right? So if it breaks here, it means whatever that is going to say, it's just going to be positive for the dollar, which means maybe they're still going to hold the rates quite longer, or maybe they will think about maybe adding the rates because inflation seems to be even getting stronger and stronger. So what we see here is we are reaching the resistance, and if I go on a 4 hours time frame, maybe you will see that the market seems to be struggling. The market seems to be struggling to break this area. So on the comment section, you can just let me know which pair do you want me to go through. I can go through that, and then we can analyze that, right? So we can easily see that we have 4 hours, actually 8 hours here, reversing around this resistance. So the question is, will the market continue respecting this area and going down? That's possible, but it doesn't really seem like that. But with this aggressive bullish move, I'm expecting to see the market going down and maybe going up again. That is possible, but it's going to whatever that is going to happen there is going to be determined by it, but by Powell, and we have some serious stuff going on. So yeah, that's what I see at the moment. Yes, we are on an aggressive bullish move. I can see someone said check gold, GBP CHF. How long until Powell's speech? I think in an hour, which means around 47 minutes left. Check on the calendar. I think you're gonna see that. So let me go straight on gold. Yeah, you can just hit send me those pairs that you want me to go through. What's really happening on gold? We can see that gold has been actually on this aggressive bullish momentum for quite some time. So what we see here is I just see a continuation of that. You see that? So on the bottom side here, the market gave us some very nice clues. So there is a chance for the market to respect this diagonal structure. Sometimes the market can even break that and respect this lowest area before pushing up. So on this one, we had a very nice buy, even though the market is reversing here and there. So I'm still expecting to see the market continuing going up. I think gold is still going up aggressively, especially if maybe you can look on the other side of the economic or geopolitical news. So I think that is quite straightforward, unless if maybe the market breaks all of this support area. It's where we can say, yes, it's time for the market to do what? To go down, right? So someone said, Brakenzo, do check GBP USD, Euro USD, and AUD USD. Okay, I will do that. Can you check platinum? I don't really trade platinum, but I will try to check that. But I don't really want to lie to you, so I don't really check that much. But I will try to see if maybe I can understand something. So I'm in AUD USD, NZD, and Euro. Okay, for sale. Okay. USD JPY as well. Okay. So let's see what we can start with. I see that it seems like you are on the major pairs. Okay, it's fine. So GBP USD, it's closer. Let's go on GBP USD. It's GU. So on the GBP USD, we are on a very nice downtrend structure. The market is still actually going down. We have some reasons behind that. Obviously, the dollar is quite stronger now, and we can easily see that this is a downtrend structure. You can see that the market is doing something like this. So where we are, for us to continue with this sell, we can see that the market can come around this level and retest there before going down, or maybe you can just wait for this support to be broken out before we look for that sell. So as you saw, the dollar is quite stronger. But my advice with this type of structure, it's quite straightforward. But as we have the news in few minutes or less than an hour, I can't recommend anyone just to continue jumping on the market, because even if maybe you are right, the market might spike up or down and you can end up losing, unless if maybe you are on the right side of the market. So sometimes the news doesn't really care much about these smaller moves here. The market might spike left and right or up and down. At the end of the day, you end up losing. After that, the market goes in your favor. Simple as that. So you have to be extra careful. So on Euro USD, you can easily see that the market is still on this quite a nice downtrend structure. So European I think it's European bank or reserve bank, they said they're going to cut the rate, but this month they actually paused the rates. So that is actually negative for their currency, as they say they're going to cut the rates. And if you check inflation of European countries, it's not really that crazy high like the or whatever that we see in the US. So which means if they cut, that is going to be great. But we're talking this with the dollar. So dollar it's getting way too stronger, because even though they can cut, but it seems like they will end up giving us some excuse when time goes on. So what we have now is we have a very proper structure. We are on a very nice downtrend. We can see that the market is giving us something there. We can use that as a potential support. So which means this is actually a nice structure. You can see that the market is doing something like this. We might have a very nice reversal going up, something like that, as the market can continue with this trend. Or maybe the market will just break this support there. Then we can end up taking a very nice sell below that support. Because if you buy here, yes, you might be right that the market is going down, but the market can still reverse and touch this area, or maybe even the highest one there. So which means it's not really safer for anyone to buy, to sell as exactly on the support area. Wait for the market to break that level, then you can jump on the market, right? So USDJPY, I saw someone said check USDJPY. Let's go there and see what's really happening. AUD USD, okay. So on USDJPY, it's been on a very nice uptrend also, but we had this type of structures which were just repeating themselves. The market stayed around this level for 2 weeks, even here for 2 weeks. After that, we had a proper breakout. So this is a proper buy, but with this aggressive breakout there, I can say that structure is not really a proper or nice uptrend. So which means for you to wait for a nice buy, it's better to wait for the market to maybe reach this level before going up. So it means the market has to create a proper or visible resistance or a support there so that we can jump in, something like this here. But at the end of the day, it seems like the market is just giving us something like that. But at the end of the day, this is actually aggressively strong. At the end of the day, you can't see proper reversal, higher high, higher lows. So it's like the market just consolidate, keeps pushing up. Like here, the market might continue going up. At the end of the day, you don't really have clear structures. But at the end of the day, we are still on that uptrend. So you should be looking for that buy, unless if the market changes this direction. At the moment, we are on a very nice buy, but obviously you can jump on the market when you see something like that, right? So gold, please. I think I did check gold. Okay. I will check that very quick then, and we can go on DXY. Let's see. Can you go over gold, please? Okay, you guys, you like gold, so let's go on gold. Let's go on gold again. Yeah, this is what we have on gold. So for quite some time now, you can see that gold has been on this nice uptrend. So this is quite steep. So that shows this bullish momentum on gold. So let's go closer and see what's really happening. So you can easily see that, or let's just clear everything. Maybe you want me to do that so that you can see clearly, because everything is already there. So now let's see. So obviously we can easily see that the market is starting from the bottom side going up. So this is a quite easy uptrend, right? So you can easily see that we have something like that, we have something like this, something like that also. So this shows us that we are on a very nice uptrend. So the market is going up very nice. So obviously you should be looking for buy positions. Why? Because we are on an aggressive buy, and which means if you go with a sell, maybe sometimes you can make money, but I don't really recommend going against the trend, right? So where we are, we can say the market is going towards our resistance, which means you should just wait with buying, even though we are on this nice trend. So which means wait for a reversal, or maybe you can just wait maybe for a breakout. So now let's draw those trends lines. Let's see if they connect. You don't really have to force them to be connecting with these areas, because this market is actually evolving. So which means sometimes you can have a new structure that connects with the new ones. So we don't really have to force to connect with the older ones, right? So let's see these double lines. These are my supports area. At the same time, this shows you that this is a nice diagonal support, diagonal uptrend, right? Not diagonal uptrend. Actually, it's a uptrend, sorry. So now we can maybe try to point out these levels. If you don't mind doing that, you can draw those. But what we have now is this area shows us that it's touching our support area. So which means as long as the market is still touching this support area, we can expect the market to continue going up. As we already know that we are on an uptrend. So for the market to continue, I don't really think that is going to be any problem unless if the market breaks out. So if we go a little bit closer, you can easily see that we are very, very, very close to this resistance. Do you see that? On the bottom side, maybe they can even draw something like that. I don't think there's anything wrong with that, as long as you understand that once the market breaks out here, there is a chance for the market to respect this level and bounce back. There is that possibility. And once the market breaks out here, you can say, okay, now it seems like the market is ready to go even lower. Because sometimes you can just jump on the market once it breaks here, and that might be just an adjustment. The market might be adjusting because it's coming from this aggressive bullish move. So it might touch this area and push up. Or if it breaks out, it will tell us that the market will be trying to break out. So any pair that you want me to check, can you tell me your opinion on stock? LI, any path? Thanks. Unfortunately, guys, I don't even know that. You can just explain that. I'm not too much on the stocks. I'm actually on the trading side. If I buy stocks, it's not like maybe I don't really have enough expertise on that, but I don't think maybe that you will ask Nick. I think he will actually try to answer that, right? So someone is Kenzo Ukupi South Africa, Limpopo, my brother. So AUDJPY and AUD USD. I forgot to check that. Let's go there. I hope maybe I answered you on gold, guys. On gold, I think I answered you. So now let's go on AUD USD, guys. Don't forget that we have some serious stuff going on. Geopolitical news that might change the way you know the market, right? Or the way the market moves. You might have your strategies and which were actually working, but this time you might think maybe things are not going in your favor and maybe your strategy is not working. No, it's not really like that. Sometimes we have stuff like times like this where the market just decides to take any route, and when you check, you might not really understand why the market is going up or maybe aggressively down. You see, so that's what we have at the moment. So let's see. So on AUD USD, guys, this is a proper downtrend. You can see this is a aggressive downtrend, especially on a bigger time frame like this. So the best way we can actually go on our 4 hours time frame and see what's really happening, because on a bigger time frame like daily, it still shows us that we are going down. So now you can just continue doing your own thing. So let's see. I think around this area we had a very proper support area. We can double that. Now you can see that the market was actually continuing on that downtrend. So if you trade in AUD USD around this area, you were just going to wait for this a nice breakout and you can jump on that, right? So but now, just because the market already broke out of this, you can see around on the top there we had something like that. So here obviously you can jump on the market. You just need to wait for a proper reversal before maybe the market goes up, or if the market doesn't really reach this level, because it's possible for most of the time the market might consolidate around this area and you can use that as your next support. Maybe the market will go up, or maybe once the market breaks out, you can use that and you can continue selling, as we know that the market is actually on a downtrend. But on my side, or on my opinion, I don't think the structures that we see now, they're going to last very long, because mostly, or 90% of the time, they are influenced by geopolitical and tensions all over the world. So which means it's just a sort of a panic. So when things go back to normal within a day or within 2 weeks or within 2 days, things might reverse aggressively. So when you go on this market, don't just go all in, right? So I see someone said check US 30 US oil. Okay, I'll check that. GBP CHF, I'll also check that. Where is GBP CHF? Okay, I will add that, right? So let me just start with oil, and I will just go down here so that I can check everything. So US oil, it's actually on a very nice uptrend. Remember, we have geopolitical stuff. So things like oil, silver, copper, let's say commodities, they are going to perform very well, most of them, right? So, but which means if you trade them, make sure that you keep up with the news because things might change very quick. So if maybe, let's say there's tensions in the Middle East, once they can maybe reach a point where they can say, okay, we agree, we no longer fight. And if you don't really check that, the market might just change very quick because things will be going right. So if you see gold going up, US oil going up, most likely just know that something's not really going right in the world, right? So now what we see here is we are on US oil YTI. The market is giving us a very proper, nice uptrend. You can see we had 3 touches there. This is actually, it's been pushing up for quite some time. So if we go closer, you can see that we are on this nice support area. And we also have this diagonal structure. So that actually means that we are still on another area where we can say the market can push to the upside. You can see on the bottom side there. The market respect these levels, these levels, these levels. So for the market to respect here, to me, I think it's just obvious. So I'm expecting to see the market going up. But once the market is going up, already you identified this area. Don't just hold unnecessarily because the market can reach this area and still reverse before pushing up again. So which means you can lock your profits or do whatever that you do just to secure your profits. After that, maybe the market will be breaking out and trying to go to the upside, right? So I think maybe I answered you on US oil. Unless if maybe we see a breakout here, maybe we will see a very proper sell. But at the moment, the market is not breaking that level, so we can't talk about a sell while we are still on that uptrend. So now we are on S&P. I'm just covering this so that everyone who was going to ask this, I'm just covering that, right? So on S&P 500, you can easily see that the market was on a very aggressive uptrend since November. You can see that. So now that we have a change, you can see that something is changing. We have a proper uptrend, an aggressive one. You can see that. So now the market started to show us that it's struggling to go up until we had that breakout. I think it was yesterday. I also took a loss on this one, actually on Nasdaq, when the market was breaking out. So you can see that the market did break out here. So which means now we are starting to think about a downtrend. We are coming from a very strong uptrend. So what is happening here is don't rush. If maybe you want to buy or you want to sell, don't rush because the market might reach this level where the market broke out and continue going down, or sometimes consolidate before even going lower. Sometimes the market might even continue going up if we have some very great news. I think we have some earnings coming. So some of them that might be quite positive, and maybe we will see the market going up. But at the moment, since everything it's like circulating on the geopolitical news, everyone is just using emotions to trade. Sometimes it's going to be difficult for you to hold these trades, right? So on Nasdaq or US Tech, we were on this nice uptrend, but guess what? We had a nice reversal. The market was going up. Guess what? We can easily see that the market was just consolidating around these levels, but the overall structure, it was going up. You can see this. You can see that. So we were still expecting the market to go up, by the way. But guess what? The market just broke out. But that is not really a surprise. The market has been going up for quite some time now. So if you've been following Nasdaq, you saw maybe the market was just going up. So what do we have now? You can easily see that the market it's now trying to retest on this level where the market broke out. So the question is, maybe Powell is going to be positive or maybe favor the stocks. If that is going to happen, we will see the market reversing. But if you are a seller, if maybe you're looking to sell, as this is showing us a nice downtrend, wait for proper retest around this area, or just wait for proper structures, because the market might consolidate around this level. So the best way is to wait for the market to go below this support area before you think about selling, because the market can still reverse, you see. But at the moment, even though you can't just jump in, just know that we're now starting to look for those downtrends. This is some serious aggressive sell structures there. So GBP JPY, please. Okay, I'll jump on that. I'll jump on that. What your target for gold? Okay, I will check that. US oil is going down to, oh, okay. I don't really believe stuff like someone saying oil or whatever is going to this whatever. I don't really believe that. Why people do stuff like that? How sure are you? Because I don't know, guys. On the comment section, I don't feel like it's a good thing to do that, because I think it's bad influence. Do the analysis, don't give people some signals, right? So on US oil, on USDT, I think we also have some great structure here. We can easily see that the market was on a very proper uptrend for quite some time also. But on US oil, the market is aggressively on the sell, and very quick, by the way. But once we go closer, I think everyone can easily see the structures. You can see that the market is actually giving us this consolidation structure, but it's actually something like that. So which means we might end up having a very proper downtrend structure. Already the market broke out, so which means the market is trying to do what? To actually give us a nice sell. So which means around this area, it might be a proper sell. But since we have the news, I think you can just wait for them, and then after you can try to jump on the market if things are still the same as that. But it's better to also go through those news. So now, okay, we are on gold. So I saw someone say, what's your target on gold? I think 2400 is fine for me. 2400 is actually good. We had a trade here. I think we are still in that. I did not really take this, but some people did take that. Actually, in my team, they did take that. So USD JPY, please. I did not check JPY. I think I did. Silver, please. Okay, let me go on GBP JPY. GBP JPY, DXY, and what? XAUD. Oh, it's silver. Okay, I will check that. But I told you that I don't really trade them, so I will just try to go through that. GBP JPY, let me go there. I saw that. So on GBP JPY, I think this is a very, very, very straightforward structure. Against JPY. JPY is quite weak at the moment. JPY is quite weak. So you can easily see that we have a nice proper uptrend structure. 1, 2, 3, 4 areas which were just straightforward. So we're already out of that. So I'm expecting to see a nice reversal. Let me zoom that for you. I'm expecting to see a proper reversal or maybe a breakout. The market might still come around this level and respect this and go up. Unless if the market tries to break this area, I can say, yes, you can look for a buy. So remember, I don't really buy or sell on an uptrend. So I will buy when the market's around this area and look for those buys. But at the moment, I will just say, wait for the market, whether to break this area, because it's a resistance. The market can just respect that. So if it breaks, then we can say, yeah, let's continue buying, or maybe wait for a nice reversal before you look for that buy. Unless if maybe we see a breakout, that will be something else. So USD JPY and go on silver, or let me just go on silver. I think my guy will think maybe I'm ignoring him. So I'm not. So silver. Remember, I don't really trade silver, but I will try to check that, right? So let's see. So it's difficult just to trade stuff that you don't really understand, because you also have to understand their fundamentals. So if you just jump on everything, you're gonna have some serious issue. So now we are on silver. What's really happening on my daily time daily time frame structure, we can easily see that, okay, it makes sense. It seems like it's just moving like gold and the other ones. So we have a proper nice resistance. It was going down for quite some time, but now it seems like we have this aggressive bullish move structure. So let's go there and see. Let's go there and see. So let's see here. This is actually on a very nice bullish move. Let's see if maybe we can get a proper support area, because you can see this area is actually where the market broke out. Let's do something like that. So let's zoom a little bit. Let's zoom a little bit. So let's see if maybe I can connect this. You don't really have to force this structures. They just need to connect. If they don't really connect, we don't really force them. That's what we see, or that's what I see actually on silver. So it shows us that it's quite similar to gold, because I saw this reversal on also on gold. So where we are, I can say we are actually on the support area, something like that. You see that? So it's moving away from this. So it respects this diagonal structure. So it means that we might have something like that going further. So obviously you should do your own research here and there. And it seems like it's moving away from this support area, which means it's going up. So try to do your own research. I'm just doing the analysis, as I don't really follow this much. But obviously it should be following gold. Yeah, right? So USD JPY. I think I did USD JPY. UJ. Let me check USD JPY. Okay. Let me check USD JPY. I think I did check USD JPY, guys. I think I did. Okay, so USD JPY, it's also on this nice bullish move structure. It shows that the dollar is flexing its muscles. So yeah, we are on a proper bullish structure. So this is a very nice uptrend structure. So our job here is to, where can we buy? Obviously, we can buy where the market is. So which means we can wait for the market maybe to reverse around this level before we buy. Or maybe the market will create a nice resistance there. So we will know where we can actually look for that buy. At the moment, yes, we are on a very nice uptrend structure. But where can we buy? We don't really know that. So maybe once the market reverses, we can actually see something and start looking for those buys. Unless if maybe the market decides to go aggressively lower, that will be a different story, right? So another question, AUD SPY. Okay, short SPY now. Come on, guys. We don't really have to say that. Someone says short SPY now. Okay, it's fine. So someone said, hey, do you generally use a risk-reward ratio or trailing stop or both? On my side, guys, I don't really use risk ratio stuff. I feel like it's something that is too much information that at some time or at some point, to me, it doesn't really make sense that much. As long as you know how much you're willing to risk, sometimes the market won't be on the fixed side of the things, right? So which means I have to be flexible. So on my side, I actually trail my profits, and if maybe I feel like I need to adjust my stop loss, I can do that. So because the market is not is also not fixed. So 1:3, 1:4, whatever, I don't really use that. I think it's just complicate my simple method of approaching the market. But I think that can work for other people. So it's not like it's bad. I'm just saying that for me, I don't really use those risk ratio stuff. I'm just, as long as I can see this is a good entry, this is a proper, like, let's say, for example, if maybe I can see here, let's say here, I can see that we are breaking this nice resistance here. My obvious stop loss might be around this level. Why? Because I'm trying to give the market a room to breathe. I'm trying to give the market a room to breathe. Or sometimes I know that, oh, we had positive news and stuff like that. I know that the market might go up. I might give the market another extra room to play around, because at the end of the day, the market will be going up. But if I just say 1:3, it means once the market reaches this, I don't really need to adjust that. So to me, it's too much stuff going on with that. So the market is already complicated. So I don't really need to complicate it more. I hope I did answer that. AUDJPY. Let me check that. Short SPY. This guy. Gold. Did you check AUDJPY? Okay, let me check AUDJPY. And someone said check Bitcoin. AUDJPY. Do we have AUDJPY here? I don't think we have. Let me add that. Forex. AUD. AUDJPY. Let's see that. Okay, let's see what's really happening. First thing first, the best thing that you can do if maybe you don't really trade this pairs that much is better to go on a bigger time frame. On my side, I'm a day trader, so which means I can focus on my maximum time frame. It should be a daily time frame. So this is what I see. This is not really necessary, the one on top. So on a bigger time frame, which is daily time frame, this is a proper uptrend. This is a proper uptrend. So which means you can maybe wait for the market. I think the market is also doing something like that. We'll go closer there. But from a bigger time frame, you can easily see that the market is respecting the support. So which means you're supposed to look for buy positions. Sorry. So let's go closer. Let's go closer on 4 hours time frame. 4 hours. So let's go there. Let's go. So already you can see that this support makes sense. So now you can just try to analyze further on your 4 hours time frame and see if maybe whatever that you're trying to show, try to see there makes sense. So I think it's fine. I think something like this can actually work. I think this is just a continuation of that uptrend. Where we are, it might be a very nice reversal for the market to go actually on the upside. I hope maybe I answered that.
Kenzo, thank you very much for going through so many charts with us. I just wanted to say quick thank you to Kenzo, everybody in the audience. If you guys enjoyed that session with Kenzo, make sure to write in the comment section of the chat. Thanks, Kenzo, for that. That was awesome. Kenzo, I just want to also share to anybody who liked your feedback there, your analysis that you just shared. I just wanted to let them know that you also have a YouTube channel. For those of you guys who would like to check out more of Kenzo's work, here it is, Extra Hot Forex on YouTube. Again, combination of technical and fundamental analysis. Kenzo, thank you very much for coming on. I want to ask you too, as we're getting closer here, we're very close to hearing from some central bankers. What's the big thing you're looking for? Are you thinking they're going to be maybe a little bit dovish sounding?
Yeah, it's crazy now because things doesn't really look good on their side. So I think, and the dollar is getting way too strong again. So I think there will be, I don't think they're going to be positive just to make things go a little bit down. And I can say it's confusing. I think you saw a retail sales yesterday. It was like seriously hot. So I think that is going to change the way they're going to plan their rate cuts. I don't think they're going to continue with that. If they continue, maybe they might not really focus on 3 cuts. Maybe 2 is going to be enough, or maybe they will just postpone that. But things don't really look good, especially we also have Middle East conflict that also pushes oil to go even higher. At the same time, oil, once it goes up, most likely prices are going to go up. That's why we see retail sales are even going higher. So it's not really good. But we'll just hear from them.
Yeah, absolutely. And you know, Kenzo, there's this weird thing though. I wanted to just point this out to you. And again, I won't keep you for too much longer. I know it's late where you're at and you've been on for a while. So I appreciate that. I wanted to also mention another thing that I thought was, yeah. So the thing that I find interesting with Jerome Powell is that it's hard to deny inflation data has been stubborn. Jobs data has been strong. You mentioned out retail sales numbers that came out were really, really strong. I mean, all of this to say,
Mm.
even though all of that stuff is strong, it seems like Jerome Powell wants to cut interest rates anyways. And if that happens, if Jerome Powell is just convinced, meaning he's just looking for a chance to cut rates,
Mm.
do you think there's any chance that if you get anything, any sign that inflation's going to come back and it's going to cool off, that the idea that rate cuts could come back into picture very quickly is a thing? Like, do you think the fact that Jerome Powell just seems like he wants to cut rates when you listen to him plays a factor at any to any of these markets?
Yes, the thing is, he tries to be positive on that, cut the rates, because it's not really a good thing for consumers.
Right.
But the data doesn't really agree with him. So he's
Yes.
trying to force his facts, but the data is always negative, or let's say, sorry, the data is always positive, and it doesn't really need to be like that. But at the end of the day, they can still cut the rates because they want the economy to perform very well. At the end of the day, if consumers are suffering, it means at the end of the day, economy is gonna suffer. So I just hope that they just continue cutting the rates. Unfortunately, if they don't really cut, that is gonna be bad. Actually,
Yeah.
it might look positive. Gold is, so the dollar is quite positive, but that doesn't really mean that it's actually good for consumers at the same time. So
Sure.
that might be bad in the long run. But let's
Well,
hope that, because the more, sorry for that. So the more the rates are higher, we will see more companies cutting their workforces. I saw Tesla, they're also cutting 10% of their global workforce. So which means they can't afford other things, or they can still afford them, but whatever that they make, it's not really enough. Sales are going down. To buy a car now, you get it with extra interest rates. So it's not going to be easy for anyone. But once they cut, yes, it's going to be good, but we're still going to talk, because some they say don't cut, some they say cut. But on our side, I think cutting slower, it's also a good thing. Unfortunately, it's not really the way we want it, because we just
yes.
want to buy the stocks.
Yeah, no, I think you're exactly right on that. A slow interest rate cut is probably the ideal situation for stocks. A fast rate cut is probably not good for stocks, because that means something
Mm.
broke. But holding for too long or cutting too quickly, both of those cases are not good. And of course, what's horrible for stocks would be if they were to hike rates. That would send the market into a bit of a spiral. I
Mm.
also wanted to just call into, I mentioned that point because I was thinking through history, and if you remember, in 2020, post COVID, Jerome Powell kept saying the infamous inflation is transitory, inflation is transitory, inflation is transitory. And it turned out that
Mm.
it was not. But the point is, Jerome Powell
Exactly.
kind of has a little bit of a track record of being a dove. He's a bit of bit dovish in those scenarios. And so,
Mm.
he has that track record of saying inflation is dovish. Sure enough, it was not. It was, I'm sorry, inflation was transitory. In fact, it was not. And the
Mm.
Fed had to end up correcting what was a mistake that they admitted themselves was kind of an overstep of looking past the data. So there's two
Exactly.
ways I guess this could go, Kenzo. I mean, is Jerome Powell going to make the same mistake and get very dovish very quickly, which of course makes the stock market rip because they start stimulating the economy again? Or is he going to try and not make the same mistake and not fight the data and just say, yeah, it's too sticky and we can't cut? Again, maybe that's what we'll hear a little bit about today in terms of him speaking. So very, very interesting times, Kenzo, and I very much appreciate you coming on the show. I also just want to say, again, just a reminder, if you enjoyed listening to Kenzo on his technical and fundamental analysis session, do me a favor, do the A1 team here a favor, and make sure to go subscribe to Kenzo's YouTube channel, support his work, just like you would support ours. Kenzo, thank you very much for coming on the show, man. We'll see you next time.
Thank you. And before I
Yeah.
go, man, I think we don't really give you enough flowers. I think you actually offering more than enough. You always say thank you, Kenzo, but I think thank you, because you always hear on YouTube. These guys, they actually hear every day, and sometimes I can see, whoa, I can't keep up with this, but you always hear. So I think they have to just make sure that they support, because I don't know how can I explain this, but to me, you're doing enough, man. So just keep up.
Well, thank you so much, Kenzo. I really appreciate it. And you know, I have a little bit of an unfair advantage. We've got a wonderful like group here behind the scenes that coordinates these
Yes.
shows. You know, you obviously know Chandler. You speak back and forth with him about coming on the show. So yeah, I mean, it's a group effort between, you know, I have fun on the camera, and then we bring on people like yourself, Kenzo. I think, you know,
Yes.
we collectively are doing something really cool for the trading community, and it definitely gets me excited and out of bed every day. So thank you
That's
again
great.
for contributing. You're welcome for contributing. We're doing it together. So thank you, Kenzo. We'll see you next time, man.
Thank you very much, man. I will see you next. I think it's next week.
Yeah.
Next week or next? I forgot.
Or
Next.
Friday. We'll figure it out. You're
This
always
Friday.
welcome.
Sorry.
Yeah. See you, man.
Thank you very much.
Yeah. All right, guys. Yeah, and a big shout out again to Kenzo. We appreciate all of our guests, and I really mean that. It's just so, to me, it's like the coolest thing ever. This is like literally, you know, early trader days. Nick's dream is to be able to hang out with people like Kenzo and Chris Pulver, and you know, all the great guests that we have on the show. Now, guys, we can switch gears a little bit and prep for, I guess, today's main event. The entree is coming out. It's like when you're sitting at the restaurant, you're waiting for your food, and you've had the appetizers, you've had a sip of your, for me, it would be Coke Zero, and you're waiting for the main thing, and you see it coming, right? It's coming out of the kitchen. It's steaming hot. You're ready to eat. You know, did anybody else just get hungry? I certainly did. Anyways, we're really close. We're really close here to potentially some interesting stuff. At 1 o'clock, we hear from Andrew Bailey. That's the Bank of England's governor there. You've got Governor Macklem at 1:15 and Jerome Powell. You know, I find this kind of interesting. You've got these two events happening at the same time. What if they both were like speaking at the same time in the same room on the same PA system? Can you imagine if they were just both giving their speech, acting like they couldn't hear each other, talking over each other? That's what I envision when I see that they're both speaking at 1:15. Anyways, we will have coverage for you thanks to the team behind the scenes. I believe we're going to have that on the screen for everyone to watch. So stick around with us. I just want to say again, special thank you to Kenzo, but also if you are tuning in, we do our best to put together a show for all traders. This is free coverage on YouTube. If this is helpful to you in any way, shape, or form, I'm going to ask a quick favor of you guys. Can you smash that thumbs up button like you never smashed one before? If you're an aspiring trader, or you already trade, or you're experienced, or whatever level, if this show brings you any value, let's pump up the like button, especially as we get closer to the event. That'll help get some more aspiring traders in here. Look at that. Whoa, I'm flying across the screen. I got to put a sound effect to that. Hold on. I'm pulling up my sound effects. Bam. Can you hear sound effects? I think I have my sound turned on.
Perfect candle.
There I am. I'm floating across the screen. Let's see. Are we going to ring in the cash register today? Look at this, man. We are all, I'm telling you guys, if you've been watching the stream for a few years, we are reaching all-time highs on the stream, not like the stock market.
It just does not compute in my brain.
Okay? Because if you're thinking stock market all-time highs, the stream is hitting all-time highs. But I'll tell you, this is what the stock market's feeling like. You ready? Listen close. Come on. Come on. I'm addicted to the soundboard. It's too fun, guys. So the stream deck is real. Okay, I got more. Should we take a look at the Dow?
You can trade Dow.
It's too fun. We got the better mic. We got the sound quality. I mean, what more can you ask for? Appreciate that. Bro's spamming the soundboard. You want to hear spam? You guys ready? Oh, that's so fun. That is so fun.
You what?
This is, you guys, this is Chandler's favorite sound in the whole world. Ready?
You what?
He loves that sound. If you guys see it in the videos, you know it's Chandler. Anyways, stock market's still flat. I think the stock market's just waiting here for what these governors from the UK have to say, and of course Jerome Powell coming in after that. So we'll see how that plays out. Dollar index maintaining its gains. Woo, wow, just flying high. I like it when Nick is happy. Oh man, I appreciate that. I need to get more sounds. See, here's the thing, James. When I'm in a stream deck frenzy, I run out of things too quick. I think I have more. You guys want? Let's just play a random sound.
Daddy Nick, save us.
Okay, not that one. I have more sounds. I just gotta find where they are. So, do you guys think that Jerome Powell will? Let's get a preview of what he's gonna say.
The economy is strong, pretty much in line with our expectations.
Okay, we got a preview there.
I'm down $50 in 25 seconds.
Oh man, I love my job. Okay, so S&P crossed over into red, and we're still sitting at support though. You know, I would not be surprised if the stock market here found a little bit of a bounce. We've seen hesitation from sellers here. We've short-term arguably become a little oversold. Possibly a bit of a bounce due for the S&P. We'll see. We will see. The NASDAQ kind of bouncing back slightly. The Dow Jones up the most, but kind of been getting beat up the most too. So gold is, oh my gosh, gold is doing its thing. Gold is doing, you know what that candle is? Anybody ready? Would anybody say that's maybe a perfect candle?
Perfect candle. Oh, that green candle right there.
That's amazing. The whole chart is support lines. Which one is really support? If you're talking about gold, right now, gold just does not want to quit. This is very, very impressive stuff. Gold found a low here this morning. Here's your daily low. 4-hour chart, price zoomed back down here, found buyers pretty quick. I mean, gold just does not want to slow down. Buyers were able to scoop up and hold this area several times. This was super impressive. I'm not in gold anymore, but I did double up on silver. Let me show you my silver position. So silver, I am long. In fact, I added slightly to my trade. So price came down here. This is where I entered the first time. Price wicked down. Price came down here. Added just slightly there. So I am long silver. I'll show you the SLV trade. I think it's like just barely in profit. I mean, it's doing okay. We're up $387 on that. I'll take that. Let's see where it goes though. Oil. I think we can ring the cash register in for oil, right? We'll take that. What I cannot, however, ring the cash register in on is my some of my options trades. I'll show you guys this. So if I go over to let's go to positions. So that's how I'm feeling over here, okay? Because what we've got in this section is you've got some puts that I've sold. I sold them way too early. XLY, XLK, TAN, that's a solar ETF. XLV, that's a healthcare ETF. The S&P 500 that I sold is looking okay because it's still pretty far out of the money. So we'll take that. We'll take that. But when it comes to TLT, not so good. Okay. TLT is a bond ETF. I talked about this earlier, but just can't catch a bid. And this is no fun. I'll straight up say it. It's not fun to watch because at this point, you know, I think we're getting a bit oversold on bonds, but the economic data is just coming in really solid. And that economic data is working against me on this trade. So, yeah. $20-year yield just flying high. That's, of course, going against me here today. Let's see what else. The stock market just does not want to go anywhere today. It seems like Russell's down on the day. The FTSE's down. The DAX is down. Chinese stock market. How's this? This must not be going well for my FXI position either. I sold calls against my FXI. That's the best trade that I've made all week. Was I sold calls against my position? Because the reason I say that's the best trade that I've had all week is because FXI, I sold calls against my existing position. My entry price on the trade is $22.90. So I sold calls on my position. So I own the shares here. Okay. And right here, I sold calls right around the high of the day on this day. I sold calls for $25 strike price. Expiration date on that, I believe, is May 10th. Did I remember that right? May 10th. So I sold calls for a strike price of $25, May 10th. So those calls are looking a lot less attractive. Because I sold those calls or shorted the premium for those calls, that ended up being okay. My oil trade's going okay. Silver trade's going okay. My options trades are just looking really terrible, but that's okay. I'm not, these are position trading essentially approaches. So for example, I'll show you this. XLK is a strike price of 200 a share. Also, I think we're starting to get some commentary, at least we're supposed to on the calendar here. Governor Bailey speaking. So if we find anything, Chandler, feel free to take over the screen. But from what I can tell, it doesn't look like we have any feed yet. Anyways, so XLK, I sold puts here at $200 per share. This is an ETF that tracks, it's similar to the NASDAQ. It has a lot of tech heavy stocks. And I sold these puts before this big drop. Obviously, I wish I would have sold those puts after the big drop because it would have resulted in me getting paid a lot more in premium. But it is what it is. If this market continues to roll lower, what that means is I have to buy the shares at $200 per share. I have an order to, it's 1,000 shares. XOK, 1,000. Yep, 10 contracts, 1,000 shares. So if I have to buy the shares, I have to buy the shares. And that is what it is. So been watching you for 3 years, Nick. You've changed my life forever. Shout out, Nick. Thank you so much. I haven't changed your life. You've changed your own life. If you've gained something from my content, I'm thrilled to hear it. But I always kind of point out that trading, even if you had somebody who is incredibly good at trading, teaching you, you still have to go through a lot in order to improve as a trader. So if you're profitable, nobody else does that for you, right? You do it for yourself. Plenty of people can be helpful to you in that journey. I hope I can be helpful to you in some ways. But at the end of the day, it's your back testing, your practice on this stuff, your hard work that will get you to the point where you're profitable overall. The VIX is down 3% on the day. The dollar index just does not want to quit. Look at that. Really, really impressive stuff. Nick, you made me a better indices trader. I appreciate that. I have not been trading the indices so much. I finally take indices trades, not momentum trades, not my buy pullbacks kind of approach. I sold puts on the indices, and that's ended up looking just not great so far, but it's a position trading strategy that I go in detail inside of our group. You can also find it on YouTube. You can see my whole strategy for options trading by searching up Trader Nick Wheel Strategy on YouTube. Nick, what do you think on gold? Yeah. Let me take a look. So I am just bullish. Now, I'm bullish technically, but I don't have a position on gold anymore. I trailed out, really unfortunately. You guys ready? This was kind of painful. So I entered gold like way early on. So I had a great trade, but my stop loss got triggered right here and then it ripped off without me. It came all the way back down, but I didn't enter during this time. I instead went long silver, and silver I am still in right now. So my current positions, I'm up a little bit on silver, I'm up on oil, but I chose silver on the go back instead of gold just because the Edgefinder's output was a little bit stronger for silver, considering some of the economic data that we've had that's been pretty strong. By the way, the Edgefinder is currently 45% off. I don't know if you guys have heard this or not. If you are looking to get a copy of the Edgefinder and you're a regular stream viewer, don't miss the sale. We'll drop the link here in the chat. Boom, right there. Click that link, and you can speak directly with a member of our team to get yourself a copy of the Edgefinder for the biggest discount of the entire year. No cap, as the kids say. Also, for those of you who are just tuning in, this is kind of cool. I have a new mic. I think it sounds a lot better. I ordered this mic, and I've got another of the same kind. We're upgrading our microphone quality. I've got this one. I spent $300 in this one. I got another one coming for the other room. So we're going to have some better audio quality, and I'm really excited about it because, you know, the better we can make the show, the better it is for everyone. So that's exciting. And I hope you guys can tell the audio difference. I feel like when I listened back, it sounded a lot better than, not that it was bad before, but I think it just sounds pretty crystal clear overall. Gold up 0.5% on the day. Silver's down 1.8. Silver's really volatile here recently. We've seen some big swings. US oil down minus 0.38%. I'd love to see this thing go positive on the day. How can we use the Edgefinder? If you have questions about the Edgefinder, please feel free to send us a message on our website. We'll drop the link. Bro, sound doesn't matter. At first glance, I'd be like, oh yeah, you know, as long as you sound decent. They actually did a study on, like, I was watching this thing about YouTube, like analytics, and say people typically will tolerate a lower quality video more or less than they will tolerate good quality audio. People prefer good quality audio on YouTube, and that's just the stats. I didn't really think too much about that when I first saw that. I listened to like a YouTube study thing that was done on some guy's channel. And I thought that was, you know, I was like, I don't know. But then I realized I use YouTube. I don't know if you guys do this too. I listen to YouTube a lot more than I watch YouTube. I listen to it if I'm trying to like fall asleep, or I listen to it while I'm doing something else. You know, maybe while I'm on a walk, I like put it in my pocket and listen to it. Right. So I don't know. Quality of audio, I think, is key. Anyways, I don't think we have any feed yet. So we're kind of just still on standby for this speech that's supposed to be happening. 1:15. We got 870 people in here. Do me a quick favor. If you're enjoying the show, smash the thumbs up button. We will, as soon as we have some sort of live feed, we'll bring it up on screen for you guys, and we can watch it together. Okay. I also listen to YouTube when walking and going to sleep. Yep. Very nice. Very nice. I'm loving the new soundboard, guys. It's so fun.
You what?
It's so fun. Anyways, again, like I said, if we get any coverage coming in, if we get any video, I can see it. It's behind the scenes, pending possibly. As soon as we have feed for you guys, we'll pull it up and react to it. In the meantime, really quick, while we wait for that feed, we're going to run a quick commercial break, and then we'll be joined by Frank to take a look at the markets together as we go into this, and maybe we'll see what the big man himself has to say. So stay tuned. We'll come back with Frank right after this. Real quick, I want to throw a shout out to our stream sponsor here on the A1 Trading Show, Forex VPS. If you haven't heard of Forex VPS before, they are a dedicated hosting platform where traders, especially algorithmic traders, can set up an in-the-cloud computer to run their MT4 24/7. If you have any experience trading with robots on MetaTrader 4 using expert advisors, they have to remain up all the time, and keeping your computer on is not always practical if you have like a power outage or that sort of thing. And with Forex VPS, you can set up a dedicated hosted computer in the cloud to host your MT4 or 5 platform. They have the fastest execution in the industry with latency less than 1 millisecond, which means when you place trades or your system places trades, it's near instant. So I've got my VPS open here from Forex VPS, and you can see, I just want to show how quick the latency is here. So if I click sell, you can see it is right away. I'm in the trade, all set, as if I was sitting on this computer, even though it's somewhere in the cloud. For stream viewers right now, Forex VPS is offering 30% off of your final subscription. If you're interested in giving it a shot, there's no risk, why not? Use the link down below and the promo code there, A1Trading30 for 30% off. If you're watching this stream at a later time, you can also find it linked in the description below. All right, we're back.
Yeah, we're going.
Frank, the new soundboard is so much fun. I need to get you one. So
I see you guys using it a lot. Yeah.
Oh, it's so addicting. I'm not gonna lie. I might just come stream here by myself and not even put it public on YouTube. I'll just stream to myself.
Can you click whatever you want?
Yeah.
Run that.
Oh yeah. So welcome everybody to Frank. I can just click a button and then let's say something's going poorly. Little SpongeBob action. Somebody says something crazy.
You what?
It's overpowered. It's overpowered for sure.
It's pretty great.
It's like Ike in Super Smash Bros. Brawl when we used to play that as kids, Frank, and Carlo would run around and just press B on the GameCube controller, and he would just just the rest of us would just get smacked off the screen, and it was awesome. Anyways. Perfect candle. Somebody requested a perfect candle.
Perfect candle.
See, I don't like that. See, the thing is, I have a bunch of my own perfect candle, but see, I don't like it, Frank, because what I'm realizing is that James has so much power. So James and Chandler can clip me saying something silly, and then let me see real quick. I know we've got some feed coming through. So
99% of all my trades are 100% profit.
You remember that from the, anyways, we got something on the screen here, guys. So we're going to go ahead and take my StreamYard or my screen over, and we'll let Chandler take over.
Thank you. Thanks, Avi. Thanks, everyone, for being here today at the Wilson Center's Canada Institute, both in person and through the miracle of the internet. Today's the opening event of the Canada Institute's Washington Forum on the Canadian Economy, as Avi said. And the objective of the forum is to educate U.S. policymakers and business leaders and the public on the dynamics of the Canadian economy and on the importance of our two countries' close economic relationship. Countries, like people, accomplish the most when they set clear priorities based on data. And any dispassionate review of the data shows that one of the very highest economic priorities for the United States has to be our relationship with Canada. Now, a lot of the discussion about the U.S.-Canada relationship tends to focus on its importance for Canada. Trudeau the Elder's famous comment about sleeping with an elephant. But Canada is our largest export market. Almost 20% of everything that we in the United States send abroad into this world of 8 billion people goes to the 40 million people in Canada, who are only 1/2 of 1% of the world. It is the largest and most comprehensive two-way economic relationship among any two countries in the world. The evolution of the energy economy of global importance will be heavily influenced, perhaps determined, by decisions that our two energy producing nations make. We have a unique role in being advanced financial economies, using a lot of energy, but also significant energy producers, and can balance the effects on economy and society of the choices that we make. And on top of that, Canada is a key U.S. ally in the international financial architecture. I've spent 3 different tours of duty in government service, where a big chunk of my job was international financial diplomacy. And we could always count on the Canadians being sane, solid, and punching way above their weight. And yet the US tends to take it for granted. And my experience in life is that the good things we take for granted, we tend to mess up. So my hope is that with this series of events, we can be part of helping focus folks in the by finding speakers and topics that will have a very broad appeal beyond the usual suspects who focus on our relationship with Canada. And we certainly have that with our event today, which includes 3 of the most significant economic leaders of our 2 countries. Bill Murnau, our moderator today, is, well, when you look in Wikipedia under Renaissance Man, there is an inset photo of Bill Murnau and nobody else. Recognizing his significant achievements across politics and policy and business and philanthropy, he's the former finance minister of Canada, playing a key role in shaping sustainable economic policies of the Trudeau administration, including Canada's economic response to COVID-19, and a key reason for Canada's aforementioned above-weight punching in international diplomacy. As a business leader, he grew the multinational human resources firm Morneau Chapnell from a family business to over 4,000 employees and the largest human resources provider in Canada. As a philanthropist, he's worked to support the arts, help at-risk youth, improve access to healthcare and education all around the world, including founding a school for Somali and Sudanese girls in a UN refugee camp in Kenya. And as a policy thinker, in addition to his role chairing this Washington Forum, he's chaired the C.D. Howe Institute, a leading Canadian think tank, and has written Where to From Here, a policy book that it is several cuts above the typical former official's post-service book. I put it up there with Robert Rubin's In an Uncertain World. Anyone who has ever served in any government of any country at any level at any time will immediately recognize the honesty and intelligence and savvy that he's brought to thinking about the lessons of his time in office for the issues facing Canada and all of us. I highly urge all of you to read it. Tiff Macklem is the governor of the Bank of Canada, and another of the reasons for Canada's substantial above-weight punching in the world. In addition to his role as governor, he's the chair.
He's got a lot to say.
He does.
Bank supervision.
He's going to start talking about you next.
Body of the Basel Committee, rather high profile these days, and he is co-chair of the Financial Stability Board's regional consultative group for the Americas. He's a distinguished economist, having headed the most important division of the bank's economic staff in the early 2000s, having played a critical role in Canada's response to the great financial crisis in his post in the Canadian Finance Ministry in the mid-2000s. He's been a senior deputy governor of the bank from 2010 until his appointment as governor. He's also been a distinguished academic, having served as dean of the Rotman School of Management at the University of Toronto. And our final panelist is Jerome Powell, chair of the Board of Governors of the Federal Reserve System. It is a weird task to introduce Chair Powell. It's like introducing Henry Kissinger. How do you do it without looking absurd? His doctoral thesis on Metternich received very high marks. So just let me say this. There is an anteroom off the main boardroom in the Eccles building, which is the Fed's true headquarters building. They're currently slumming it in an annex, where the portraits of all the Fed's chairmen hang. And as you look around them, it is borne in on you that none of them will have been as consequential across as broad a range of matters as Jerome Hayden Powell in managing the remarkably low inflation and high employment of the pre-COVID period, in the world historical response to both nationally and globally to the COVID event, in the first major review and explanation of a formal monetary policy framework for the Fed, and in managing the quite effective response to the most significant inflation in almost half a century, but one in which many of the traditional guideposts could not be helpful, requiring very creative thinking and deft management of the extremely well-meaning but hydra-headed body that is the Federal Open Market Committee. So with that, let me thank you again for coming, and let's turn to our panel.
Well, I want to start by thanking you, Randy, for that very, very generous set of introductions, and also for your willingness to step forward as the co-chair of the Washington Forum on the Canadian Economy. So we very much appreciate your esteemed leadership, and one of the key reasons we're here today is due to that. So really appreciate it. I'll just say personally, one of the things I like most is you said Canadians were sane. So that's a pretty good starting point, I think, for our discussion here today. So with two esteemed panelists, I won't really be speaking much. I want to give both of you gentlemen an opportunity to talk a little bit about your respective economies. And I guess also recognize that we're here to talk about the Canada-US relationship and what is both distinct and different about our economies, but also what we share. So maybe with that, I could start with you, Governor Macklem. And
we're switching different feed.
We'll
Let's
talk
do it.
to Governor or Chair Powell.
Well, thanks to COVID. Remarkably, the average
right.
was exactly the same, average 2.2% in both countries. The sources of growth, though, have been a bit different. In Canada, we've grown more by adding workers. Our participation rate has risen more, and we've had proportionally higher rates of immigration. In the United States, adding workers has also been important, but increasing output per worker or productivity has made a relatively larger contribution. And I will admit, in Canada, we look at US productivity growth with some envy. And we do ask ourselves, I mean, what can we learn from the US experience? We are concerned about productivity growth in our country. Turning to the financial system, we both have strong banking systems, but the structure of our banking systems is quite different. In the United States, you've got a lot more banks than we do in Canada. In Canada, we have 5 large national banks and a number of important regional players. The structure of our mortgage market is also somewhat different. In Canada, the typical mortgage is 5 years. In the US, typical mortgage has a term of 30 years. And our banks in Canada tend to hold mortgages on their balance sheets. US banks securitize a lot of their mortgages. Despite these differences, our systems are very integrated. And indeed, a number of large Canadian banks have large operations here in the United States. Our pandemic responses were also mixes of similarities and differences. You know, broadly speaking, the paths of our two economies were pretty similar. We both cut interest rates very dramatically to effectively zero to support the economy through the pandemic. Then we both raised them very forcefully as inflation rose rapidly, and we've both seen inflation come a long way back. Growth has been more resilient in the United States, though, through this tightening cycle. And I think that's partly related to the stronger productivity growth I mentioned in the United States. And it may also be related to the fact that monetary policy may be having a bigger impact on households in Canada because of the different structure of our mortgage market. More of our mortgages have reset in Canada, so more people are feeling those higher interest rates. And that has restrained household spending more in Canada. In each of our countries, I do want to underline that, we gear our policy decisions to our domestic monetary policy mandates. And in Canada, we have our own currency, we have a flexible exchange rate, so we can run our own monetary policy. So simply put, we don't have to do what the Fed does. We can do what Canada needs. I do think, though, we're looking at the same things and asking ourselves the same questions. I think we both need to feel confident that we're clearly back on a path to 2% before it would be appropriate to reduce interest rates. Last week in Canada, we held our policy rate at 5%, where it's been since last summer. We did stress that we are encouraged by the recent progress we've seen on inflation, and we want to see it sustained. And just this morning, Statistics Canada published the March CPI. As expected, headline inflation came in close to 3%. We have seen gas prices in both our countries move up. Importantly, though, measures of core inflation did tick down again, and that does suggest that underlying inflationary pressures are continuing to ease. So we continue to be moving in the right direction. The other thing I want to underline is that in the conduct of monetary policy, we do spend a lot of time looking and understanding what is going on in the United States. U.S. economy has a very big impact on the Canadian economy. We also watch the U.S. economy closely, particularly through the extraordinary period we've all been through in the last few years, because the more we understand what we have in common and our differences, the better we can learn from each other's experience. And let me just close on a few words on just how integrated the Canadian-U.S. economy is. And Randy, you highlighted some of the the key facts. I would totally share your perspective. I think the economic relationship really is the model for mutually beneficial open trade and investment. 77% of Canadian exports flow to the United States. And as you underlined, what less people know is that Canada is the United States' biggest export market. 17%, or as you said, almost 20% of U.S. goods head north to Canada. If you look at foreign direct investment, there is a similar two-way dynamic. In 2022, more than half of Canadian FDI went to the United States by far the largest share of our FDI. That was roughly $43 billion. In the same year, $50 billion of US FDI came to Canada. So it's a pretty balanced relationship. And I think what these numbers underline is just how close that economic relationship is and how it works in both directions. And the final thing I'll say is when you look forward, we face many of the same structural challenges. Our labor forces are aging. There's going to be a big challenge with new technology, training, and making sure we have the skilled workers our economies needs. Climate change is affecting both our economies. We're both grappling with shifting trade and investment patterns globally. Supply chains across both our countries need to build more resilience. Conflicts internationally are increasing global uncertainty. And for all these reasons, I am very glad we're having this discussion. We do have much in common. And Randy, as you underlined, when we work together, we can get a lot more done. Thank you.
Well, thanks. That's a great place to start. Chairman Powell,
Great job.
Really interested in hearing your perspective.
Another
Everybody
place to
bow
start is
down.
to say, why don't you call me Jay and call Tiff?
Okay, I know I do it behind the scenes. I'll do it in front of the scenes too.
Great. So let me start by thanking
JP,
Randy and
there
Bill
he
and
is.
Xavi and Tiff for this. It's
Here I
great
am.
to be here today.
Look like a
I want
baby
to
in that
echo what
picture.
Randy said about the mutually beneficial, respectful, great relationship we have with Canada, economically, culturally. And I'd also like to echo, I thought Tiff did a great job talking about the similarities and differences in our economy, our financial markets, the challenges we face in our policy stance. It's almost as though you somehow had a copy of that part of my remarks, Tiff. So I'm not going to repeat that, but what I will do is talk, if I could, a little bit about the U.S. economy and where we find ourselves right now. So as
Here we go.
I think Randy pointed out, the performance of the U.S. economy over the past year has really been quite strong. We had growth of more than 3% last year as rebounding supply supported both robust growth and in spending and also employment, alongside a considerable decline in inflation. More recent data show solid growth and continued strength in the labor market, but also a lack of further progress so far this year on returning to our 2% inflation goal. So I'll say a little bit about our two mandate goals, maximum employment and price stability. As I mentioned, the labor market remains very strong. Payroll job gains have been strong over the first quarter, averaging just a tick above 275,000 per month. The unemployment rate has been below 4% for 26 consecutive months, which hasn't happened in more than a half a century, the longest streak of its kind. Strong demand for workers has been met by a substantial increase in the workforce due both to rising labor force participation and a substantial increase in immigration, as indeed Canada has experienced as well. So even with this strength, by many measures, our labor market has been moving into better balance over the past year.
Dollar index.
The ratio of job openings to unemployed workers was extremely elevated in 2021 and 22, has now moved back down to levels just above the pre-pandemic era. Surveys of workers and businesses indicate a normalizing labor market. So do the rates of both quits and hires. And broader wage pressures also continue to moderate, albeit gradually. So the overall picture for the labor market is one of real strength, but gradual normalization. Turning to price stability, our inflation mandate. Inflation, of course, declined quite significantly over the second half of last year, over the whole year, but particularly in the second half. But 12-month core PCE inflation, which is one of the most important things we look at, is estimated to have been little changed in March over February at 2.8%, and the 3 and 6 month measures of inflation are actually above that level. So we've said at the FOMC that we'll need greater confidence that inflation is moving sustainably toward 2% before it would be appropriate to ease policy. We took that cautious approach and sought that greater confidence so as not to overreact to the string of low inflation readings that we had in the second half of last year. The recent data have clearly not given us greater confidence and instead indicate that it's likely to take longer than expected to achieve that confidence.
Ooh.
That said, we think policy is well positioned to handle the risks that we face.
Yep.
If higher inflation does persist, we can maintain the current level of restriction for as long as needed. At the same time, we have significant space to ease should the labor market unexpectedly weaken. Right now, given the strength of the labor market and progress on inflation so far, it's appropriate to allow restrictive policy further time to work and let the data and the evolving outlook guide us. Come what may, we remain strongly committed to returning inflation over time sustainably to 2%.
Well, thank you. I think that's a really important frame for our discussion today. One of the things that I remarked on when I first got into public life was how often I saw my international peers as we moved around. And when I see the two of you,
I'm going to mute him for a second. Kind of unexpectedly hawkish. I wouldn't have expected Jerome Powell to kind of like pivot his narrative on just a conversation like this. But markets are all over the place. You got stocks down slightly. Gold gave back some of its gains. Oil's jumping around. Yields are up pretty substantially near high of the year. So very interesting.
2 G7 meetings per year for ministers, that's finance ministers and central bank governors. We don't attend the leaders meeting, but we attend in the United States, but we attend the meetings with the finance ministers, which Bill was, and also 2 G20 meetings. So that's 4 meetings per year right there. We also have 6 meetings at the Bank for International Settlements in Basel. One of those is now virtual, but we're in and that's only central bankers, no finance ministries. So it's all central banking stuff. And, it's economics, it's financial regulation, all those things. We also come here to Washington, or every third year we go someplace else twice a year for the IMF World Bank meetings, which is kind of what everybody's doing in Washington right now. So it's a lot of meetings. What do we do at these meetings? Fair question. Essentially, the central bankers are having an ongoing conversation about what's going on in their own economies and their own financial markets, their own regulatory world with each other. And we're also talking about the big global issues of the day, as you would expect. So some of which are really the business of the elected government, not the business of the central bankers. But we have that discussion. It's more or less ongoing. We're seeing each other all the time. They're very informative, these discussions, and they really are, for me anyway, part of the way that I get to thinking about what the right policy is for the United States, is to hear what is going on around the world, what's happening globally, and how are people thinking about that. So it's very, very useful, particularly, though, given our close cultural, financial, and economic ties with Canada. Those discussions are especially fruitful and important. And, I have regular conversations with Tiff. By the way, I do keep very close track of the actions of the Bank of Canada. I read Tiff's press conference transcripts carefully and pay close attention to that. Tiff did mention the similarities and differences. I'll say one more thing, which is we go to Basel, as I mentioned, 5 times a year. You're a long way from home, and we're there for 4 or 5 nights, and there are usually 1 or 2 nights off. So we go looking for someone to have dinner with, and very frequently we wind up with the Bank of Canada delegation who are really good and very funny and a lot of fun together. So we have a very close relationship with the bank and great respect for that institution, as I'll have a little more to say about lately. One other thing I'll point out, though, about our relationship is we did do, as Randy pointed out, our first review of our monetary policy framework really ever. And we looked around. The Bank of Canada also does regularly. I think it's every 4 years. In any case, we really looked to the Canadian model and other models of how to do that. We talked to people at the Bank of Canada about how their regular framework review went. So we really benefited for that. So that's what I'll stop there.
Tiff, similar perspective from Canada?
Yes, I mean, I'll just add a little bit on as Jay outlined, certainly from my perspective, one of the best parts about this job is we do, the international community, the central banking community. It's not like a commercial bank where you're competing against the other bank. We're all in this together, and if we get it right, we all help each other. So there is a considerable openness, and as Jay outlined, I think there's a few different functions. Yes, we obviously, if you're in Canada, we have our own group at the Bank of Canada that analyzes the U.S. economy, forecasts the U.S. economy. It's very important to Canada, but the Fed's group is a lot bigger. They got a lot more experience. Hearing what the Fed has to say is incredibly valuable for us. The other thing we do, though, is it's more than just the data and the forecasting. It's thinking through the scenarios together. What risks are on your mind, Jay? What do you think could go wrong? What are the scenarios? How would we handle it if this happened, if that happened? Being able to put your heads together and think through the risks, the scenarios, the strategy. There are also a number of really, I would say, sort of behind the scenes, very central banky technical issues that nobody really thinks about except central bankers. But what are the mechanics of QE? How do you exit from QT? How many settlement balances are we going to need to? Fortunately, those are things most people don't have to worry about. They are critically important for the implementation of monetary policy. And that sort of plumbing working of the financial system, and being able to talk to people who are thinking about these things as much as you are is hugely valuable. And then the last thing I will say is, there's some things that we're only going to succeed if we do together. The obvious one would be financial supervision and regulation. Our financial systems globally are highly integrated. We were deeply reminded of this in the global financial crisis. What happens in other countries affects all of us. And money flows across borders. So, we have to do that together or it's not going to work.
Well, maybe we can drill into that for a minute. Obviously we recognize that most of your work is focused on the domestic markets, but in times of crisis, there's real challenge. As you mentioned in the COVID period, the global financial crisis, that you were engaged with, Tiff, earlier in a different stage of your career. And for me, it was remarkable, the number of interactions with counterparts around the world during those crises. So maybe a question to both of you is, what kind of interaction happens during periods of crisis? What doesn't happen? Are there things that we should be thinking about differently in order to prepare ourselves for those challenging moments and making sure that the financial system is resilient? So again, maybe over to you, Jay, to react to that and hear your thoughts.
Sure. So, our economies, our financial markets, all of our institutions are deeply intertwined. And when there is a situation where there's serious stress, you need to get a global perspective. You need to get perspective around the world, and you have to do that very quickly. And we of course can move quickly and effectively on the domestic front. But what the thing that you figure out in those times is that all the time you spent at Basel and at the G7 and G20 meetings, your colleagues, you know and trust and respect their judgment, and you don't have to go through that phase of gaining trust in people. You understand each other, you speak the same language. So there's a lot of communication. The level of communication is pretty high anyway, but during crises, it goes very high. I'm constantly talking to other central bankers around the world, and also political leaders in our government, and that sort of thing. So that happens a lot. The sense of what you're doing, again, is mostly sharing information and ideas about what to do. There may be a proposal that people are looking at, and you're talking about that. So it's very useful. I say one thing to point out is it's less about coordination than it is about talking and understanding, for one reason, or at least it was during the pandemic. And that was because almost every country's interest rates were very close to zero when the pandemic hit. And so there wasn't policy space for most economies, most central banks, to do a big coordinated rate cut. We did cut very quickly to zero, but I think we were higher than almost any other nation in terms of where our policy rate was. But anyway, there's a lot of communication, and those relationships that you built up really do help at that point. In terms of what you asked about learning, what have we learned? I think that the pandemic is going to teach a whole lot of lessons over time. I still think it's too early to say what they are with confidence. And I'll point out, look, the pandemic has surprised us over and over again, most recently in the United States, the remarkably strong performance of the economy at a time when virtually all economists were expecting a recession. So I think if you'd asked for the lessons of the pandemic a year and a half ago, you'd get a very different answer. Now, I think in a year or so, we'll have a lot more answers. It is a unique set of circumstances, and we're still learning, I think, but we will try to learn those lessons. Different point, I would say, about the bank stresses, another crisis, at least here in the States. I do think we can and have learned the lessons of the stress of early last spring. And I would point to a couple things that we embraced pretty forthrightly. One was that supervision was not tightly focused on the right things, was not proactive enough, was not forceful enough. And we've tried to take steps to remedy that. I also think there will be some regulatory initiatives for banks of that size and with those characteristics in time. So I do think those are lessons that we have learned.
And from a Canadian perspective, similar lessons or different ones?
Yes, I think there are similar lessons. Maybe I'll just give a couple of other examples. First though, I will just underline, when a crisis hits, you're faced with a situation, you have to make decisions, and you have very limited information. The other reality is you have a pretty narrow window to act to be really effective. And for both those reasons, being able to speak, directly to Jay, to connect with our other colleagues, finding out what's happening in their jurisdiction, how are they thinking about it, what do they see as the options? It is hugely important in a crisis. And that it's a little more, though, than just information sharing. I mean, I think it helps us avoid unintended consequences of our actions. Sometimes you do something and it works for most parties, but not one party. And in a crisis, it's the weakest link that can take you down. So you've got to be careful. It also, I think, boosts confidence in the system. If we're acting in a way that is coherent together, it boosts confidence. It looks more like a plan than a haphazard policy response. Just to give you a couple of examples, I wasn't actually governor at the start of COVID. Jay was there, but certainly looking at it from the outside, the coordinated actions of major central banks to reopen fixed income markets, providing liquidity, providing market making of last resort in scale. It reopened core functioning markets. And by all doing it essentially at the same time and all working in scale, the whole global market restarted. If that had not happened, this crisis would have been a much deeper and more severe crisis. And then the other one I'll highlight is coping with the inflation as we came out of COVID. By all being resolute in our commitment to restoring price stability, by all matching our words with forceful action, raising rates rapidly, we all helped each other. I mean, it helped reduce global inflation in goods, which was really the first part of the inflation surge, and it helped keep inflation expectations in all our countries better anchored. And I think it is a key ingredient in how we have all managed to get inflation down a long way back without causing recessions in our economies. And the last point I'll just highlight is something you said. Occasionally this coordination is very explicit. So for example, at the time of the global financial crisis, there was a coordinated G7 interest rate cut. I remember clearly because it happened at 3:00 in the morning in Canada, which was a little bit of a technical challenge. But most of the time it's not explicit coordination, but it is those conversations. It is that shared information. We have similar objectives, similar goals, similar tools, and we're sharing information, and that leads to a coordinated response.
Well, maybe you could spend a little bit more time on that from the Canada-US perspective. So Randy mentioned in his opening comments the idea that when you're in Canada, you're living next to an elephant. And I think a lot of Canadians would assume that that Canadian policy has to take into account U.S. policy.
I think they're going to talk
maybe give us a
anything
perspective into how
related
important that
to
is for,
monetary policy going
for your
forward anymore? Do you
deliberations
think this is
and how that factors into decision making?
It's kind of hard to tell. It seemed like Jerome Powell got out of his system.
Well, look, I think it's pretty clear that our U.S. economic relationship is by far our most important.
It sounds like they're
relationship.
just
Our
kind of talking
economy
about their
is highly
relationship with
integrated.
each other now.
35% of our GDP is exports,
Yeah.
and 75% of that goes to the United States. So multiply, that's a big chunk of our GDP. Our financial markets are also very integrated. In fact, yesterday I was in New York, and when you go to New York, you are just reminded how integrated our markets are. I was at the New York Stock Exchange, and all over are cross-listed Canadian companies on many of the screens. Our financial systems are very integrated. Our banks have most of our large banks have operations in the United States. Our pension funds are big investors in the United States. So we do spend a lot of time understanding what's going on, trying to understand what's going on in the United States and looking at the implications for Canada. There are, though, I highlighted in my opening remarks some differences. Another important difference I didn't focus on is, both our economies have big manufacturing sectors, big service sectors, large commodity sectors, but the commodity sector in the Canadian economy is quite a bit bigger than it is in the United States. Oil and gas, agriculture, forestry, mining, fishing, 40% of our exports, 13% of our GDP. And the commodity cycle can be quite different. And we have a flexible exchange rate that does help absorb the differences. And I think it's an important reason why historically sometimes our monetary policy do differ. Our cycles are often quite similar, and certainly through COVID, we had a similar shock and a pretty similar cycle, and our monetary policy has been quite similar. There have been other episodes, though, where particularly if the commodity cycle is different, you'll see monetary policy diverge somewhat from the United States. There are limits to how far it can diverge, but as I emphasized, we have our own currency, we have a flexible exchange rate, and that absorbs the differences to allow us to gear monetary policy to what we need to do in Canada.
And Jay, from your perspective, obviously the U.S. has an outsized role in the global economy, and I guess we'd be interested in understanding how much time do you deliberate on what your actions will have as reactions, and how much do you think about what's happening with global markets as you come to your conclusions?
So I'll start by saying that each central bank serves a domestic mandate, which is, in the case of Fed, is using our tools to achieve maximum employment and price stability for the benefit of the people we serve. So it's a domestic mandate. But in the case of the United States, we fully realize and appreciate that our decisions can have significant effects on not just on Canada, or Mexico, but on countries around the world. And that's all the more so because the dollar is the principal reserve currency, which strengthens the transmission of our policy through the global economy. So we also know that that those effects on global demand from our policy changes can have an effect on the United States as well. That can rebound to the United States. So we're very, very aware of all of that. And for one thing, we try to be very transparent and predictable, given the flow of data and events. I mean, you have to move quickly sometimes, but we do realize we have a special obligation to be predictable and transparent, and that benefits us in doing that as well. So international spillovers, of course, are an important consideration. We do track that. Ultimately, though, we think over time, the most important thing we can do to support the global economy is to deliver on our mandate of price stability and maximum employment here in the United States.
And is that, have there been changes in this current cycle that have driven any differences? I mean, you've talked about the different drivers for inflation this go around from previous periods of inflation. So do you think about it differently as you approach these things?
Yeah, well, specifically on inflation, I do think this is different. This is not simply the more standard case of overheated demand, which has been the typical thing in the post-war era for the U.S. economy and other major Western economies. There are similarities and differences, and I would characterize it that this way, that the inflation that arose suddenly really in the early part of 2021 as economies reopened resulted both from constrained supply and also elevated and rechanneled demand from services to goods. So if you remember, and you I'm sure will, there were unexpected widespread shortages and supply chain failures on a scale not seen in recent memory. In the U.S., several million people had left the labor force, creating a severe labor shortage that was more fully felt once the economy reopened, leading to a huge spike in wages, but also in the ratio of job openings to unemployed workers. So very unusual situation. Households had elevated levels of savings and demand was very, very strong as well. So we thought, what's different is, have thought since we've understood the situation, that restoring price stability would require both the unwinding of the pandemic-related distortions to both supply and demand, as well as the effects of tight monetary policy on demand, which would give the supply side time and space to recover. And we think today that we're seeing those two things working together to bring that end about. And you saw that, I think, in 2023, which was really, in a large way, a supply side story. What happened was the supply side really recovered in 2023. We thought that it would recover in 2021. And in 2022, I was beginning to lose hope. And then in 2023, you saw the shortages and the issues with the trade pipelines.
I was beginning to lose hope.
Not fully resolved, but largely resolved. You saw the U.S. labor force shortage alleviated by both higher participation among people who had dropped out of the workforce, but also from immigration. So that was the year of the supply side recovery. And you saw the core inflation rates drop by 2 full percentage points in the face of very strong growth. So that can only be explained by the enormous increase in potential output, the supply side increase over that year. So that's how I would say it's different this time.
And Tiff, maybe you can tell us how it's different in other ways in Canada. So we were talking about the similarities and the similar approaches to dealing with inflation and the positive results, but we've seen a divergence in Canada with respect to growth. So clearly there's some differences too. Maybe can you reflect for people what those differences look like and what the ramifications are for you?
Yeah, I will focus on the differences, although I will stress I think the main story is the similarities. And as Jay outlined, what is so unique about this whole cycle is that supply has played a much bigger role than we're used to. And from a monetary policy perspective, we don't have as good line of sight to supply as we do as demand, and we don't have any tools to influence supply. Our tools work on demand. In terms of what has been different, if you look at the Canadian economy, growth was essentially zero in the second half of last year. And what that meant was the economy, which was very overheated, supply caught up with demand. In fact, it more than caught up with demand. The economy moved into excess supply, and we're now seeing the effects of that in terms of relieving price pressure. So, why did demand slow more in Canada and the United States? I think that is a difficult question. I pointed to a couple of things in my opening remarks. I think productivity growth in the United States has been a lot stronger. You've gotten more supply than we have.
SPX
so you've been able to grow more
and NAS hold this level here,
or less inflationary pressure. And then the second thing is, I think monetary.
It's surprising to me that they haven't moved further either direction. I was just looking at. We'll come back to the stream in just a second. Dollar index continues to stay strong. You've got S&P. It's got wicks on the bottom, hasn't really made a decisive move. NAS, same thing. Dow, same thing. All have been sold off, but pretty hawkish from Jerome Powell, I would say. I mean, basically opened up the idea. Last time we heard from Jerome Powell, it was we still think inflation's going to find its way lower. This time he was like, we're with the recent data, we're seeing a pushback on that. So, I think, and he also mentioned that he thinks that they're at a comfortable spot to pause if needed. So I don't know, that doesn't look incredibly optimistic for for gold and things like that. Despite that, though, gold is still flat on the day. Silver's down slightly on the day, well, down 2% on the day. You've got oil flat, you've got yields up. This is probably what's not great for metals and for stocks, as yields are flying high, staying higher here, suggesting, especially on the 2-year yield, I mean, it's at 5%. So that's right around the high of the year, which is, very interesting. Currency wise, you got the dollar staying strong across all of its peers for the most part, and hardly any pullback. So I don't know. We'll see. Is it going to hold here, Frank? Is it going to push off these lows? Was the market already expecting him to be hawkish? That's the big question, I guess.
Yeah, I don't know. I think that it kind of came down to earnings today. We're looking at stronger earnings. We're hoping for them. And every time we would see something good, I think it's just the geopolitical issues that keep pushing us lower. Powell didn't say anything really new, and from what I heard, in his last talk about this, he said we would be comfortable in staying where we're at for a while. So I think that the expectations of the forecast are going to keep getting pushed back. I think June is no longer an expectation of a cut. September, November, however, are more so in the majority of I think like a 5.2%, 5.25% versus 5.5. So they're still open to it this year. I don't think he said we're going to hold off, but he's over the last several meetings we've had with him, he said we're open to cuts and we're open to keeping rates where they are. And I think, they've been at this level since last summer. So I think the hikes are out of the question still.
Yep.
Maybe there are fears that we'll have to resort to that, but I don't think they'll happen. And it's just about when. And if it's still the same sentiment, like September is still expected, I don't know. I think it more so comes down to geopolitical issues. So if price breaks this level, that's going to be kind of scary for the markets in the short term. But if it holds, then it's like, well, this is a pretty big level for all these indices. If they can, see a bounce by the end of the day or into the end of the week, it's a pretty good sign.
Yep, we'll see what JP is back on. So let's see what he had to say.
If that's Canadian humor, we absolutely love it. So send more. We can't get enough of it.
That's a small but important part of our trading relationship, I guess. Tiff, all jokes aside, any comments from your perspective?
Yeah, well, first of all, as Jay underlined,
we
don't
set joke and we missed it.
Let me just say
we missed the big man.
I
think they were just
give you more of a picture. I mean,
It
first
sounded
of all,
like they were
you
just
look
chilling
at our two countries. The
this point.
east-west border is the longest border in the world, and it's a long way across Canada. So it often makes a lot more sense to trade north-south than to trade across the country, and that's really it comes down to geography in some sense. I mean, that's fundamental to the interties we have across our countries. Many Canadians are closer to fellow Americans than they are to fellow Canadians, just the nature of the geography. You look at what are the things that we buy and sell? Well, some of the biggest things in Canada, we buy a lot.
It seems like for now, Frank, that they might have just moved on to just discussing going to the relationship between Canada and the U.S. So maybe we move past the meeting for now. If anything else exciting comes up, I'm sure we'll have coverage for you guys, whether it be later today or tomorrow. For now, I think we'll probably call it good there. Keep an eye on it. Frank, thank you for coming on the stream with me, and we'll see you back tomorrow.
Sounds good. Thanks.
All right. See you, man. Yep, guys. So again, just following up, summarize, I guess, the simple recap for those of you guys who are just tuning in. Jerome Powell and Tiff Macklem were speaking about the relationship between the U.S. and Canada, but kind of in a broader sense, the relationship between the U.S. and major central banks all around the world to play the important role that the U.S. has in setting monetary policy. And he came out swinging with some remarks right off the bat. He kind of pointed out that U.S. economic data has been surprisingly strong recently, that they, if needed, will continue to hold rates at where they're at. And, there was a brief period there where Jerome Powell seemed very dovish. It seems like he stepped back a little bit from outright saying, we think we can cut rates. A little bit of a pullback on that from Jerome Powell. And the market can kind of sense that. Not only that, we also, of course, have geopolitical concerns that have creeped back into the market, which is arguably why, you're seeing yields back up. We're at a 10-year yield of 4.67. That's a high of the year so far here. We'll see where that goes. But as that continues to creep higher, why isn't gold coming down? Usually that would cause gold to retrace. And the big reason is because, at least arguably, there's debate why it's up so much. But a big reason I would say is that we've had geopolitical tension escalate in the world. You're seeing other central banks who are more keen on cutting interest rates, which, of course, cutting interest rates is associated usually with gold prices going up. Gold does not only listen to the U.S., it looks at other central banks. And if other central banks like the Bank of Canada, the Bank of England, the ECB, if they do start to cut rates, we may see a bit of a gear shift when it comes to monetary policy, and hence metals could like that. Current positions for me, I am still long silver. I am long oil. This is where I'm at in terms of positioning wise. These are my momentum trades. I've also got some options trades that I've discussed on camera here a couple of times here already. TLT going terribly for me with the yields going up so much. That's not great for my position trading on TLT. XLY, I've sold puts across several different stock market ETFs. So of course, with the stock market selling off today, some of those are in the red. We'll continue to watch that for the position trading side. And then on the momentum side, I'm pretty much only long commodities right now, gold and silver. So I have a silver position on, which has come back a ways away. We're down 2.25%, though yesterday was a remarkable day. We've given back some of those gains. It's been all over the place, very, very volatile here. And, we're doing it one day at a time. Got the soundboard back. Let me see if I can share my sound here. Soundboard is back. I think, guys, we're gonna shift gears again. We're gonna hear from James. We're gonna get some updates on the stock portfolio here. So stick around for a little bit. Last thing I will say, if you're a regular fan of the show, remember the Edge Finder is currently 45% off. That sale is ending. If you'd like information about that, click the link being dropped in the chat right now to speak with a representative, get access to our trading software for fundamental traders. And you can also find that link at the top of the description if that's easier for you. So real quick, we're going to take a quick break, transition back to James, who's going to take over the show for a little bit longer here. Stick around.
What is going on, everybody? We are back for part 2 of our trading portfolio. Is there anybody still here that was with us earlier and voting on the stocks that we bought? We bought Tesla, Google, and McDonald's earlier, and some more gold. We bought a third position in gold. So we were really, really busy earlier. I'm curious to know if there's anybody in the chat that was Sasi was. Very cool. Anybody else that was hanging around from earlier? Tony. Very cool. Well, welcome back. We don't have quite as much to go over, but we still have some stuff that I want to take a look at. Just a reminder, or if this is your very first time seeing this really quickly, this is the A1 Trading Community Stock Portfolio. That means that you watching get to vote and decide what we buy and add to our stock portfolio. All of these different things here, we've added to it so much recently. All these different things here were all voted on by you guys, and you guys alone chose what we added to the portfolio. To do so, you can do it in the Telegram. We can drop the link to that. Telegram, completely free to join. And if you want to participate, vote, and buy some stocks with us, join the Telegram. It'll be fun. Really quickly, speaking of that, let me show you really quick. So this is what we did earlier. We did Netflix versus Tesla. Tesla won, so we bought Tesla. Google versus Microsoft. Google won. And McDonald's, Starbucks, Dave & Buster's. McDonald's ended up winning that one. And then we rebought some more gold. Now, I'm going to start off. We're going to start off with another head versus head. All right, head to head stock. We're going Home Depot or Lowe's. We're going to jump right into it. Home Depot or Lowe's. That's going to be our first poll. Home Depot or Lowe's. Let's talk a little bit about these. Home Depot has had just a beautiful chart, beautiful growth for a long, long time. Hit a little bit of a range 2022, 2023, like a lot of markets, but then broke out of that and is pulling back here over the last couple of weeks, 4 weeks in a row. We're looking at weekly chart right now, 4 weeks in a row. Not so good for Home Depot, but could be good for us if we end up buying Home Depot. The analysts say buy based on 38 analysts. Some believe it's a strong buy. The majority of people think that it's just a buy right now. And some people are saying hold. We are below the average price. This is a really cool thing because this shows the analyst price, like where it averaged the average trading price. If this is like a really high spot to get in, this is a low price to get in, this would be the average price to get in. So we're actually trading below average right now on our way towards the low price, which means that this would technically be a good price to buy it at. And I like looking at this too. This, however, not so good. So this is income statistics, income statement right here under the financials tab. We can look at net income, total revenue, and operating income. And if you are paying attention, you're seeing a lot of red. A lot of red here. So this is quarterly projections for quarter 3 and quarter 4. So this isn't official, but this is what it's projecting later on this year. A lot more decline in their net income. Total revenue down as well compared to previous years, and operating income down as well. So maybe that's why it's trading so much lower, because it's going to continue to move lower based off of their 2024 projections. Lowe's, on the other hand, analysts also say buy. Based on 36 analysts, we have a couple saying strong buy, a couple saying buy, but most of them are just saying hold. In fact, the Lowe's chart looks kind of similar to the Home Depot chart right now. It looks very similar to the Home Depot chart, actually. Not far off of all-time highs, trading at $262 a share. Big pullback recently. And same thing here, trading below the average analyst price. So if we decide to go with Lowe's, this could also be a good price point to get in at. Their financial statistics look a little bit better than Home Depot's. It's projecting huge growth later on in 2024. Total revenue, however, continues to decline. Same with operating income for the most part. So starting off, Home Depot or Lowe's. Again, join the Telegram, vote for free. We're about to buy $10, just a partial position here, Home Depot or Lowe's. Let's see. It's hard to go against the hometown kid, Home Depot. Shout out Arthur Blank. But the projections for lows do look better. The projections for lows do look better. Or do I go with the hometown stock? I'm going to vote for the I'm going to vote for lows. I think that the projections for lows looked better. Just trading at a cheaper price. Both charts look technically very similar. If we're going to do a little bit of technical analysis, they both looked very similar. My vote, I think, is going to be for lows. Home Depot is the winner, though. 31 votes in, 68% to 32%. I don't think that's flipping anytime soon. We're not close enough to 50-50. So y'all voted Home Depot. Fair enough. We're going to buy $10, just $10, just a little taste of Home Depot. There we go. We are now proud owners of Home Depot stock. Now, next order of business. I've been debating on whether or not to do this because I don't want to give up on it that easily. Hold on, let me see. For anybody asking for Forex stuff, we're all done with Forex stuff for the day. If you want to watch the Forex stuff, feel free to go back and watch the earlier portions of the live stream. Nick was on, so was Kenzo. Nick and Kenzo were on. We've streamed for over 3 hours today. So there's tons of Forex analysis that you can go back and rewatch that happened earlier today. But right now we are doing A1 Trading stock portfolio. Oh, so here's the other thing I was going to do. So I was really excited a few weeks ago to jump in some of this Reddit stock. I thought it was going to be cool because it's just hot, fresh on the market. It debuted on the market March 21st, so it has not even been 1 full month that Reddit has been public on the stock market. But ever since like the second week it was out, essentially, it's just tanked. Right now, because of our position size in Reddit, I think, or maybe, yeah, just because we bought it at kind of a cheap price. I mean, we only bought $10 worth of it, but we bought it at $53 a share. Now it's trading at $41 a share. We've lost, technically speaking, our largest percent open P&L loss is on Reddit right now, down 22%, much more so than any other thing that we own. Now, granted, that's only $2 because we only bought a $10 share at like $50 or whatever. But I'm wondering, is it time that we sell our first stock? Do we kick Reddit out of the portfolio? Or do we hold on to it and see what happens? What do you guys think? Let's do a poll. And let's see if we're going to sell our first stock. Should we sell Reddit? Yes or no? Should we get rid of our Reddit stock? Yes or no? I've got no problem holding it. It's just I've lost a lot of faith that this thing is going to move up anytime soon. It could continue to go a lot further down before it starts going back up, which it's going to take time for it to go down, and then it's going to take time for it to go back up. So is it worth it to just go ahead and get out now? Analysts are saying buy based on 12 analyst reports. We only have info of Q4 2023. but those numbers are really good, though. Percentage-wise. I don't know. I'm curious to see what you guys have to say. There's a little news blurb here. Donald J. Trump stock continues. Stock drops. Trump's stake in Truth Social. What does this have to do with Reddit? What does Truth Social stock have to do with Reddit? All right. Should we get rid of our Reddit stock? Are we buying or selling our Reddit stock? Or not buying. Or are we selling or keeping our Reddit stock? Go vote, guys. 8 votes in there right now. While that's getting voted on, I'll talk about our final. Yeah, I'm going to talk. So this is what else I have for us. So earlier, our category was food, and we had McDonald's, Domino's, Starbucks, and Dave & Buster's were our 4 restaurants that we were choosing from. Now I want to do automotives. I want to do cars. We don't own, well, I guess we do. We own Tesla. We bought Tesla today. But other than that, we are not in the automotive industry at all, other than Tesla. So I have some interesting stuff to show you here. Starting off first with something simple. We're going to start with the most basic one, and then we're going to go a little bit deeper, and then we're going to go a little bit deeper, and then we're getting into the really advanced stuff, okay? So I promise it's going to get more interesting from here. In fact, if you look at the list here, maybe you can figure out what we're looking at. There you go. So Toyota is first. Analysts say buy Toyota based on 2 analysts. One says it's a strong buy. One person says buy it right now. And the other person says if you are buying it, hold on to it. Slightly above average price right now. But look at that chart. It looks, technically speaking, very strong. Very strong, especially as of recently. Which makes me think, too, it could be due for a pullback. Whenever you see something move like this, it's very rare that it doesn't give back some of those gains, at least for a little bit before moving higher. Looking at the financials, this is what I like to see. Nothing but red. And even more than that, I like to see exponential growth, right? I want to see each of those numbers continue to get higher as we move along, as we're doing business. Let's do even more business. So operating income, we're talking trillions of dollars here. 22% to 35 to 94 to 156, back down to 76, but I won't be too mad at that. Point is, operating income looks very, very good. Total revenue looks great as well. Each quarter is more than previous year's performance. So each couple of months, we're doing better and better. Net income overall looks great. Toyota could be a good purchase. But then I was looking at this. I was looking at peer comparison. And for some reason, it doesn't work when you click on some of these. But here's the second we were going to look at. So Toyota, in terms of EPS, was ranked number 1. But Ferrari, we could I can't own a Ferrari car. No shot. But I can own partial Ferrari stock. Ferrari is ranked number 2. Analysts, based on 12 analysts, say buy, and it's sitting basically right at its average price right now, just tiny bit under its average price. Let's look at the financials, income statement, bar chart. Again, quarter after quarter after quarter, we're seeing growth, yearly growth, total revenue, still growth, not really like not big moves. We're not seeing, numbers in the 30s and 40% here, but still, nonetheless, quarter after quarter, we're seeing more revenue coming in. Operating income going up as well. So here's what the chart looks like. They're on a weekly chart. Wow, they didn't go public until 2015. Interesting. So there we go. So we looked at Toyota, we looked at Ferrari, and we got two more that we're going to get into. Double check, make sure I'm not missing anything in the chat. Nope, looks like you guys are having your own conversation in the chat. Let me check up on the thread as well. 45 votes in. Are we buying or selling Reddit? I'm going to say yeah. I'm going to say we're selling Reddit. And we are. All right. Reddit, the consensus is the community thinks that you're going to continue to head lower before things get better. I tend to agree with them. I think things are going to get worse before they get better for Reddit. So maybe we can revisit you, Reddit, on another day. But for now, I want to sell. I've never actually sold anything before, so I'm going to have to figure this out for a second. Close position. Close by a market order. Yeah, I think that's what we want to do. Reddit. Salute. Order confirmation. Sell. It's out of there. All right. So we kicked Reddit out of the portfolio. Not too sad about it. It was performing pretty poorly. All right. So we looked at two. We got two more to go. We looked at Toyota. Overall, looks pretty good. We also looked at Ferrari. Overall, also looks pretty good. Now, here's where things get interesting. Let's take a look at Rivian. You guys know what Rivian is? I see these every once in a while. It's kind of like, it's an electric car company. I'm going to pull up a photo. Rivian. So it's an electric car company, and I think that they just specialize in trucks. So this is Rivian right here. If you ever seen one of these on the road, it's an all-electric brand, Rivian, specialize in trucks and SUVs. And I think that they look very cool. They look very cool. Not too terribly expensive as far as fully electric vehicles go. I think that's a little bit more than a Tesla, like a base model Tesla. But other than the Cybertruck, Tesla doesn't really do truck. So if you wanted an all-electric truck, Rivian might be the way to go. So Rivian, let's see. This is what Rivian looks like. It looks kind of, scary at first, but this is what the investment is all about, right? This is where people potentially think Rivian could be, up here. But right now, I was reading a news article actually about Rivian. It was actually comparing Rivian with, I'll go ahead and show you our next company so that we can go ahead and get the poll out, is going to be Nikola. It was comparing these two because if you are unfamiliar with Nikola, It is another electric car company, but they also do hydrogen fuel. Check this out. So this is Nikola. Hydrogen fuel cell EV now in production. They also have fully electric vehicles. And this is specifically for like semi-trucks and trucking. So you'll see when you browse around their website, they're trying to make net zero emission semi-trucks for, I guess, cross-country trucking. 500 miles of range, refuel time of 20 minutes, zero tailpipe emission. And this is powered by hydrogen. They also have the electric one, battery, 330 mile max range, 90-minute charge time, stronger, 645 horsepower compared to the other one. I don't remember exactly what it was, but I know that this one is bigger. Again, zero emissions from their truck, fully electric semi-truck, hydrogen electric semi-truck. Okay, so that's Nikola. Interesting, but look at this, guys. It's selling for less than $1 a share right now. We don't own, in our entire trading account, we own one full share of something, and that's OGN, because we bought it at $17. That was the price for one full share. Other than that, we don't own a full share of anything. We could own 10 shares plus of Nikola if we decided to go with it, right? So their chart looks pretty similar to Rivian, where it started off with a lot of potential and it died down a lot. Now, we went over the analyst rating and the financials for Toyota and for Ferrari. Well, I wanted to show you this because this article came out yesterday. Dang, there's a lot of news about it. When was I looking at? Hold on. All right, I might just have to Google it. Apparently, a billion different news articles came out about Nikola and Rivian in the last. Oh, well, I'm looking at Rivian. That's the problem. Hold on, guys. Bear with me for 1 second. There we go. There it is. All right. So this is what I was looking at earlier. The better EV stock, Rivian Automotive versus Nikola Corporation. And it gives a breakdown of what each of these companies are. And the biggest problem Rivian faced was in their manufacturing. So when Rivian went public, it predicted it would produce 50,000 vehicles in 2022, but eventually halve that to 25,000, and they only ended up getting out just over 24,000 in that full year. So they initially said 50,000 is what they predict, and they didn't even get half of that. But it says in 2023, Rivian overcame its supply chain issues and produced 57,000 vehicles. So they actually produced more than they had predicted they would produce in 2022. So that helped out a lot, but is it enough? In 2024, they expect to produce 57,000 again. As it grapples with macro headwinds and stiff competition from other EV makers and a shutdown of its main plant in Illinois for several weeks to streamline its production and integrate new technologies. So they're not doing 57,000 because that's all they can do necessarily. They're shutting down their main plant in Illinois so that they can upgrade it essentially. So in 2024, analysts expect Rivian's revenue to rise 11% up to $4.9 billion as it narrows its net loss from $5.4 billion to $4.6 billion. So they're still unprofitable for the foreseeable future. However, analysts are expecting 11% more revenue to come in this year compared to last year. which is good. Going through it, and then it talks a little bit more about Nikola as well. And it says that the clear winner in this scenario is Rivian. However, here's your counter argument. Should you invest $1,000 in Nikola right now? We're not going to do 1,000, but we could do 10. Basically saying it's trading at such a cheap price right now, and people think that it has the potential to be one of those crazy Bitcoin, Nvidia type stocks. If it really takes off, you're getting in on the ground floor right now, essentially. This is the ground floor for what could be 5, 6, 10 years from now, like something crazy. So that's the argument for Nikola. All right, so there we go. We have our 4. And let me type these really quick. So our 4 are Toyota and Ferrari. That's not how you spell that. Ferrari and Rivian and Nikola. Toyota, Ferrari, Rivian, Nikola. Yep. All right. Last stock for the day. If you're hanging out watching with us still, join the Telegram so you can vote and be a part of this. Ferrari, Toyota, Rivian, Nikola. I think that they all have potential. I do. The financial numbers for Toyota and Ferrari both looked really good. The analysts both said buy Toyota and Ferrari. Rivian is already a company that is starting to have success, still in debt, still not technically profitable, but increasing profits this year from last year, which is a great sign. And then Nikola, just the complete wild card underdog, could be pretty crazy. Hi, James. Do you evaluate stocks using PE ratios or DCF, etc., or do you buy stock using technical analysis, especially if you're holding your stock for 1 to 3 years? So, Levi, to answer that question simply, neither. I am very new to all this. I am learning, just like a lot of people watching are. And when it comes to stocks right now, other than like Nikola and Rivian, truthfully, if you take a look at what we have, it's all pretty safe stuff. I've been keeping it relatively safe and relatively mainstream right now. Looking at technical analysis a little bit, looking at charts and looking at pullbacks, and now looking at the analyst ratings, reading an article or two, and then looking at the financials to see if quarter over quarter, if they're continuing to grow. It's really just kind of as simple as that right now. And then I'm leaving it up to you guys in the Telegram to vote on what we buy. But yeah, that's kind of it for me at the moment. I would like to incorporate some more stock-oriented analysis, but that's just going to come with time and learning about this stuff. Because like I said, very, very new to this, and it's very interesting, but also very complicated stuff going on here. But that doesn't mean that we can't invest and learn together and still have fun. So that is what we're doing. Yeah, of course. All right, so we got 38 votes in here. Get your votes in now, guys, because this is going to be the last poll of the day, last stock that we're adding to the portfolio today. In my vote, I think I want to go with the wild card. I think I want to go with the wild card. Although, for the sake of the community portfolio, it's probably not the best move to buy that one because we're probably not going to see any growth on it. And we want to have fun. We want to invest, but we also want to have fun and make some content and see some growth. I don't think it's going to win, so I'm going to vote for it anyway. Yes, I am reading the chat. It's more fun when you get to read the chat. It's more fun when we interact together and I'm not just talking at a blank wall. Because that's literally what I'm doing. I mean, straight in front of me, past the computer screen, is just a blank wall. So when I'm looking directly at the camera, it's kind of like I'm just looking at the wall and talking to nobody. All right. 42 votes in. I'm voting Nicola. I'm really curious. I don't know which one y'all are going to choose. But I'm going to vote Nicola. Toyota. Really? That was the one I thought y'all were going to pick the least, to be honest. Toyota. Y'all are playing it really safe. That is a safe option, but I can't go against you, so let's get some Toyota. Just $10 worth of Toyota today. Or how much cash do we have in the account? $270. I guess if we bought $20, we would have $250 in market value and $250 in cash balance, so it'd be a perfect even split. So I guess we'll do that. We'll buy $20 worth of Toyota stock. $20 market order. Buy it right now. There it is. Boom. All right. I'm great. How are you? No, not even a full share, because look at, for one, we only started with $500. We're seeing how much of a portfolio, how much can we build into this portfolio that we have, starting with just $500. And we have such a huge list of stuff now. Maybe the next time we do this, we'll only focus on what we already have and look and really dive into what we want to buy more of and work our way up to buying a full share into some of these companies. But man, I mean, some of this stuff is expensive. I mean, we could, theoretically, I could have bought one full share of Toyota and had enough left over to buy one full share of McDonald's. And then our portfolio would be 2 stocks. We'd have Toyota and McDonald's and we'd be out of money. But doing it this way, you get to add a lot more stuff. So to recap before we finish out, we have $20 invested in Apple, $20 invested in NVIDIA, $10 invested in Nike, Walmart, Lockheed Martin, JP Morgan, and Coke. We have bought one full share of OGN, which is a healthcare company. Y'all are some gold fiends, so we have bought gold on 3 separate occasions. So we have $30 invested into gold, $10 invested into Meta, $10 invested into a Bitcoin ETF, and then today we bought $20 of Tesla, $20 of Google, $20 of McDonald's, $20 of Toyota, and $10 of Home Depot. So there we go. Okay, so yeah, there we go. Thank you to everybody that was voting in the Telegram. Shout out to you. Look at all those polls we did today. We bought all kinds of stuff today. This was definitely the most that we've ever added to the portfolio in one day. So shout out to you for sticking around and hanging out with us. 3-hour and 40-minute live stream. Did anybody stick around for the entire live stream? Who thinks that they watched the live stream the longest out of the 260 people that are still around? Did anybody watch it for more than like 2 hours. I know follow the trend. You've been in here for a minute. Yeah. But these people are just... Bob watched the entire stream. Shout out to you, Bob. Max B. Heck yeah. Awesome. Awesome. That is really cool to see. Hoot Hoot Incorporated's been here for less than 30 seconds. I've got news for you, buddy. The stream is ending right now. We'll see you guys tomorrow. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And before you go, make sure to take advantage of our massive discount on the Edge Finder for our 2nd year anniversary. Links are below. From all of us at A1 Trading, have a great day, and we'll see you next time.